Plan for a DNA-based vaccine. We'll look at the multi-billion-dollar race for a solution. Matt.
All right, very interesting stuff today. Let's take a look at European futures. They are not very interesting. Not a lot of movement. We're getting some sense of direction now as DAX futures move down to about 0.2%. So let's take a look at the live equity trade with the global macro movers screen on the Bloomberg terminal. It shows you a cross-section of risk assets, and the far left-hand column shows you equity indexes. They pop in there and populate the screen as markets open up. You can see the FTSE doing a whole lot of nothing there. The OMX in Stockholm down about 0.3%, and the FTSE is sort of slowly sliding lower. That's the sense you get when you look at the European equity index futures as well. So possibly moves to the downside, not huge ones. You can see the CAC 40 now open down 1/3%. The DAX opened down about 1/4%, and the AEX in Amsterdam unchanged. So markets are moving lower this morning, but they've been looking pretty darn good lately, especially on the other side of the pond. The S&P 500 closed at a record high for a third day in a row. Markets just continue to power higher over there. Here in Europe, Germany is the closest we've got to an equity index that's unchanged year to date. It's actually down right now about 1.75%, whereas everything else is dropping by double digits. So why isn't Europe keeping up with the gains that we see in the U.S.? For the answer to that, let's go to John Rowe. He joins us right now from Legal and General Investment Management. He's the head of multi-asset funds there. John, let's start with what's going on in the U.S. You know, continued gains there, even though companies, consumers, and countries are loading up with debt after a period of no income. I mean, massive, eye-watering amounts of debt after making no money for months. Why do markets continue to hit new record highs in the U.S.?
The very high technology weight clearly plays a key role. We've seen this acceleration of tech adoption, which has allowed it to decouple from a lot of the index. So you still do have sectors in the US that are down quite a long way. So energy down 40-odd%, REITs down, or real estate down something like 25%, and even utilities down year to date. But it's that very high tech weight that we just don't have in Europe that's the biggest distinguishing factor, and has led the US to these nearly double-digit returns year to date, compared with around -6 in Europe.
John, good morning to you. In terms of what's going on in Europe, we've seen this big news, as we said in our headlines, from Germany overnight, approving the extension of the furlough scheme. Is that an investable theme for you? Is that something that will make the difference to some of the stocks that you're exposed to? I mean, I know that you've got some positions in autos, for example, which perhaps takes you into Germany.
Yeah, I think so. So one of the most predictable features of Europe is the fiscal side. The somewhat more left-wing governments will necessarily support their people, and you'll see these long-term packages, generous packages that are part of the social contract between the people and the government itself. I think in Europe then, the theme is more around who are the main beneficiaries. So for example, in the bond space were long Croatian bonds because they could get around 15% of GDP from the European Recovery Fund. In America, actually, it's more of an on-off theme. There's a real risk as to whether or not a package is put in place before the election. We saw this dip in consumer confidence yesterday, which has been attributed largely to the potential roll-off of benefits, which, the risks around that have not gone away because the US is a lot less committed to this long-term support. So from that perspective, in Europe, it's more around who are the known winners, because I think the policies are quite well set and the direction of travel is well defined. Whereas in America, it's more of a risk on, risk off. This is a real risk event as to whether or not consumer confidence gets undermined by the lack of clarity.
I'm curious as to why Germany is outperforming the rest of Europe in terms of benchmark indexes. On one hand, John, we can see that, SAP and now Delivery Hero and some of the other tech companies feature prominently on the DAX, whereas oil and gas companies and banks that have been hit so hard feature prominently on the FTSE. But on the other hand, it looks like Germany has handled the coronavirus crisis better than, say, Spain and the UK. Which is it?
So yeah, I think it's partly the sector decomposition and also the fact that emerging markets are up year to date. So actually that kind of export-orientated economy, particularly looking to the east, is in some ways supported. We've got kind of 4% returns on emerging markets. And then secondly, there's just this great debt dynamics in Germany. So Germany's been decreasing its debt to GDP by 2 to 3% per year for the last 5 or 6 years. And so as a result, its debt to GDP just isn't very high. So there's huge amounts of spare firepower there in Germany if it's needed. Whereas obviously in the peripheral countries in Europe and in the UK, there are higher starting debt levels, and the UK has got the uncertainty of Brexit to deal with. And that does create quite a different dynamic. Germany has vast amounts of money to throw at its specific problems if it needs to.
And I suppose this might throw up opportunities for you in Europe then, John, because, we look to you to bring us ideas for positions that are unloved and left behind. You talked about how that is something that you invest around. So what do you see in Europe that is unloved and left behind? I mean, apart from entire indices, as we just discussed.
So apart from entire indices, then telecoms, actually. So you mentioned it a few minutes ago. The telecoms is an unloved industry. It's performed very poorly for a couple of decades, poor earnings and derating. We feel that there are catalysts to the upside here. It could be an indirect beneficiary in Europe of greater digitalization, and it could just give them that little bit of pricing power that they haven't had in recent times. And then also, as governments look to encourage that tech adoption, maybe there'll be a little bit less constraining on tech itself. So on telcos themselves. So telecoms is an area that we feel is unloved. There are some catalysts out there related to the coronavirus that potentially benefit it. And so for that reason, that's one we've added in the last month.
All right, John, you're going to stick with us. We're going to get more from you. John Rowe, Legal and General Investment Management Head of Multi-Asset Funds, is here to give us a little bit more insight. And Anna, I'll just say, as an editorial aside, you were right the first time. Indexes is Bloomberg style. Just go with it. We beat our path forward in global journalism, our own path for the last 30 years. And
I know this is Bloomberg style.
Yes.
I know this is Bloomberg style. Sometimes I fight against my own cultural background.
Well, and you have a very cultured background as an English, as a British subject of the Queen. So we appreciate that as well. But, we go with indexes. Coming up, inflation fears infiltrate the bond markets ahead of Jay Powell's address at Jackson Hole tomorrow. We'll discuss all you need to know about the Fed's meeting in the mountains. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. 10 minutes into the trading day right now, and we're looking at a mixed picture. The DAX now bouncing a little bit higher. The FTSE down 1/3%. Struggling. Markets are struggling to find direction, but it is, of course, very early on in the session after weeks of gains, really. Let's get the Bloomberg Business Flash. These are today's top corporate stories from the Bloomberg terminal, starting with McDonald's. It's investigating if its former chief executive, Steve Easterbrook, covered up impropriety for others. He was fired, of course, in November over a consensual relationship with an employee, but the company has since received a tip he had multiple affairs with workers. McDonald's concluded he lied and concealed evidence during the initial investigation, though Easterbrook denies the claims and says the company knew all about it when they made up his severance agreement. Virgin Atlantic has won creditor backing for its £1.2 billion bailout. This paves the way for final approval at a court hearing next week. The airline was plunged into crisis after the pandemic grounded flights, and the UK denied it aid from a bailout fund. Goldman Sachs appears to be stuck with some of the bonds it was trying to sell in a $1.1 billion airport deal last week. Goldman was the underwriter of the debt issue for the Los Angeles International Airport, and according to portfolio managers, about $130 million of the debt was still available after the sale. One investor says the deal didn't offer enough yield for the risk. And that is your business flash. Anna?
Now, inflation fears, Matt, are infiltrating the bond markets before Jerome Powell speaks on Thursday at the Kansas City Fed's annual symposium. He'll discuss the central bank's policy framework review and may lay the groundwork for a new strategy to seek faster inflation. John Rowe, Legal and General Investment Management Head of Multi-Asset Funds, is still with us. And John, between you and me, one of the great reasons to tune in for coverage of Jackson Hole is usually the incredible backdrops, the incredible views. But I know that you're very much focused on the content, and there will be plenty of that this year. So what do you expect to hear from Jackson Hole in terms of the average inflation targeting, which seems to be a preoccupation for markets right now?
Yeah, so the policy review is very likely to lead to this average inflation targeting, so allowing an overshoot in the good times so that you hit it on average, allowing for the bad times. Now, crucially, that in and of itself, when it was first announced early in the year, or back end of last year, had very little immediate market impact, which I think highlights that people didn't really believe that the Fed was making a significant change. I guess the surprise would be if they talk about inflation catch-up. And that's not the market's base case. That would be the surprise event that would worry markets more. If they said, well, we've had several years where we've missed our inflation target and we're going to actively try and catch up what we recently missed, that would be the kind of upside surprise for inflation and for the central bank's mandate. On the average inflation targeting, you're talking about a couple of attempts in the good times. And this is against a backdrop of where the Fed has failed to achieve a core PCE at 2%, which is its target and its mandate, over the last 5 years, despite the fact it drove unemployment down to just 3.5%, the lowest in over 50 years. So against that backdrop, there really is a seeing and is believing element here. But the flip side of that is that there is definitely a market narrative building that this time it's different, that inflation could explode off the back of the coronavirus response.
What do you think about the idea that modern monetary theory has become an acceptable practice, or the idea that that's what makes it okay for investors, that governments have spent so many trillions of dollars in order to bail us out of this without having, the GDP growth prospects to back that up? I mean, debt to GDP is going to soar, and you really don't see that impacting yields or gold or the dollar that much.
No, I think that's true. And I think the reality is that everyone thought QE at the time would cause inflation. It didn't. Everyone thought driving down unemployment to such levels would drive sustained inflation. It didn't. And therefore, markets have become very comfortable that in the background, there's some structural force that is driving down inflation. And that's probably things like tech adoption and a global workforce. That means that any tension or tightness in one workforce can spill out into where there's more space. And I think it's those structural factors that have allowed markets to get as comfortable as they have done, and why there's this narrative building that maybe this time it's different, that something around putting money in people's pockets rather than into inflating asset markets, for example, in the case of QE, will lead to a different response and lead to actually greater inflation going forwards.
Yeah, that's interesting. Do you buy that argument, that latter argument then, John? Do you think that that makes the difference, that we'll see inflation this time for that reason? And if so, how do you lean into that trade or against it if you don't believe inflation is coming?
Yeah, so we don't believe that it's coming. Our view would be that this time it's not different. This is a structural force which has been at work for over a decade and will continue. And therefore this will remain. But we do think it's a narrative that could gain real legs, and you don't want to stand in front of a train like that. So for us, we need the narrative to build so that we can stand against it. We do not think it is different, but we do think that if you look at inflation markets, 30-year inflation break-evens in the US are just 0.1% below where they started the year. So that does show a lot of support for the market as a whole. And if we see that break out further with the idea of modern monetary theory and so on, then that's when we would start to lean against it. Faster tech adoption should be deflationary, and a 10% US unemployment rate, anything really above 5, is also likely to act as a valve to release inflationary pressures.
So what do you think then we're going to see happen to the price of assets like gold, which, you know, obviously has hit record highs recently, Bitcoin, which is back to 12,000. I mean, these kind of assets that people worried about inflation sometimes might reach for.
Yeah, I think so. So our view would be that gold is very, very loved, and that should be a headwind for it going forward. So there is a lot of enthusiasm for it as an asset class. It's a bit bubbly in that respect, a bit like Bitcoin. It's captured the enthusiasm of the retail investor to some degree. You could argue the same about elements of US equities with this pickup in retail trading activity through the coronavirus. So I would expect those to be headwinds. I would expect Bitcoin as a whole to remain very volatile. We don't really think of it as an asset class. It's not really a currency. It's not a good store of value. But clearly it has its proponents and its supporters. And in the case of gold, there's nothing to stop real yields staying where they are. But if we saw real yields become more negative in the US, we would continue to look to go against that. And again, that would not be supportive for us on gold.
What are you doing with some of the trades that seem to tap into what the Fed is buying at the moment, John? I mean, if you look at US investment grade credit, for example, are you happy to just keep following the Fed there, or do you start to divest some of the exposure?
So we've been short US investment grade credit for around 2 months. And the reason for that it just moves so fast. We actually added to US investment grade credit when spreads were about 300. We then cut it when they got into around 130. And that was because it had gone so fast that we felt US investment grade in particular had gone further than its fundamentals. Since then, there's been a bit of a relative pullback versus both European credit and GBP credit. And so we'd be looking to probably go more neutral. Where we are still more positive is high yield. High yield spreads have only contracted around 3/4 of the spread expansion that we saw in 2020. And that is one area where we think the Fed backstop, coupled with the still higher than normal spread, does make it attractive.
John, thanks so much for joining us. Always great to get a chance to talk with you. John Rowe from Legal and General Investment Management. He is the head of multi-asset funds there. He will be continuing the conversation with us on Bloomberg Radio as well. So you can get more from John at 9 a.m. UK time, 10 a.m. on the continent by just going to, bloomberg.com/radio, or you can click on the radio button on your Bloomberg mobile app. Coming up, trading the stay-at-home economy. For the first time, European exchange-traded funds tracking the NASDAQ have attracted more money this year than funds tracking the S&P 500. You can hear more about that on our weekly program, ETF IQ Europe. That's at 9:30 a.m. UK time. This is Bloomberg.
Welcome back to the European Market Open. This Wednesday, 22 minutes into the session, and we see some modest gains for European markets, up by 0.2%. The FTSE 100 underperforms a little. Now, July was the hottest month for US IPOs since 2014, and we have more offerings on the docket. Bloomberg's Simone Foxman has the latest for us. Simone, very good morning. Give us the details on the latest offerings then.
Yeah, good morning. Two new exciting U.S. offerings here. First, Palantir seeking a direct listing, according to a filing with the SEC on Tuesday, and asking for things that the other direct listings haven't in the past, in particular for shareholders to hang on to their stakes for a little while. Also, we saw Cliff Robbins ask for that SPAC. He, in fact, doubled his target, added Gary Cohn to that listing, that his SPAC now seeking $600 million. Both of these just indicative of the excitement among U.S. investors for things that might otherwise not have been so traditional. Things like SPACs. I remember talking to folks about them a year ago, and then just being, this being a very niche part of the market. Also, same thing goes for direct listings here.
Yeah, I mean, it may be indicative of the exuberance in markets, right? I mean, not everyone understands what a SPAC is. It's basically when a group of people want to buy companies, but they don't have the funds. So they go to public markets, they do an IPO in order to get investors on board, build a war chest, and then go out and buy funds. A lot of times called a blank check company. Very interesting stuff that so many people, TPG also rushing to markets to raise funds for a couple of different SPACs. A very interesting trend there. Jack Ma's Ant Group also filing to go public amidst this slew of IPOs, Simone, looking at huge valuations. Tell us about this.
Yeah, looking at a $225 billion valuation. That would include an equity raise of about $30 billion. And if it got that number, that would in fact be the largest raise in history, topping even Aramco. And now this listing is going to happen on 2 exchanges. The largest piece is probably going to happen in Hong Kong, but the company also will list on the Shanghai Star Exchange. I mean, this story, I think, is interesting in the sense that Ant Group is sort of avoiding potentially the risks of being a U.S.-listed company. That might have been the direction that some investors would have expected them to go if we were talking about this a year ago. But on the other hand, again, the exuberance for this Chinese consumer as this company expands into the financial sector. So we'll have to see if this becomes the largest debut on record, guys.
All right, Simone, thanks very much for joining us on this story. Simone Foxman covering the SPACs and IPOs and SPAC IPOs out of Doha for us. Let's take a look at some of the movers that you want to keep your eye on 25 minutes into the session. Electa had first quarter operating profit that beat even the highest estimates, and you can see that stock soaring more than 13% right now. Telecom Italia, we told you want to keep an eye on it. La Repubblica reporting Italy is unlikely to block Telecom Italia deal with KKR. And then Ambu, you can see falling 14%. Full year, the full year outlook there cut down to the low end of the range. So even if equity indexes aren't putting up the biggest moves ever, we do see some big individual movers. And coming up, we'll talk about Hurricane Laura, a big mover in its own right. Adversity and volatility are really understatements, and we're seeing that in a lot of the markets this morning. Let's take a look at what's going on in terms of equity indexes right now. A bit of a mixed picture across Europe. We have no change on the CAC 40 in Paris. On the other hand, the FTSE is down 0.2%. The DAX is up 0.2%. And you can see the broader benchmark stocks Europe 600 also rising 1 or 0.2%. If you take a look at the group ranked returns screen, GRR go on any index, you can see that banks are the big outperformers today, media the big underperformers. I'd say this is a fascinating screen to look at year to date if you want to try and explain the difference between what's going on here in Germany, where we're basically unchanged for the year, or in London, where the FTSE is down 20% for the year. The breakup of industry groups tells you why that is. You know, tech stocks are doing well year to date. Right now you can see we got a one-day chart here. But oil and gas and banks are down big year to date, and that's why the FTSE has so underperformed the DAX. Anna?
Yeah, absolutely. And we're still waiting for the DAX to get into positive territory year to date. But as you point out, it's not that far away, just 1.1% away from being in positive territory. So another day or two, you never know. Let's get a Bloomberg First Word News update then, Matt. Some of the top stories we're covering here at Bloomberg. Germany is extending its job aid program that has kept millions of people from unemployment. The subsidies were originally intended to last for 12 months. Now they'll be provided until the end of 2021. According to the IFO Institute, about 5.6 million people were on the benefits in July, down from 7 million in May. The second night of the Republican National Convention was capped by speeches from Secretary of State Michael Pompeo and First Lady Melania Trump. Pompeo sparked controversy for recording his speech during a visit to Jerusalem. The State Department prohibits political activity while on official travel. It's the latest U-turn in the UK government's coronavirus policy. English children over the age of 11 will have to wear face masks if their school is in a high-risk area. That includes when moving around the building and in communal areas. They won't be required in classrooms. And in less risky areas, it will be up to the school to decide if masks are necessary. And it's the end of an era for Barcelona. After dozens of titles, hundreds of goals and countless records, star player Lionel Messi wants out. The footballer handed in a transfer request, having grown unhappy after a disappointing season was compounded by a humiliating loss to Bayern Munich in the Champions League. But Barcelona has hinted it won't automatically grant Messi's wishes. A legal battle could be coming. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Matt.
All right, now oil is holding at a 5-month high as Hurricane Laura bears down on key refining facilities in the U.S. Gulf Coast region. It's poised to become a roof-ripping Category 3 storm. That's the term we've been given, roof ripping, when it comes ashore along the Texas-Louisiana coast late Wednesday. Hopefully those roofs are on tight. But it does threaten to inflict as much as $18 billion in damages across the coast and keep some of America's largest oil refineries shut for months. U.S. Energy Secretary Dan Brouillette says the industry is ready.
We are very prepared for this hurricane that's seemingly moving into this Houston, Southwest Louisiana area. As you know, the Houston Channel is there. Port Arthur, big, huge refinery is down there. Several other important pieces of our oil and gas infrastructure are down there. We have a specialized office here at the Department of Energy that is directed by an assistant secretary that is responsible for our CAT response. Their teams are already evaluating this. We're working closely with the industry. We feel that the industry is very well prepared for this type of storm. In addition to that, the president has directed me to make available the Strategic Petroleum Reserve in instances like this. That's what it's there for. We are doing all that we can to ensure that we are capable of doing that immediately following this storm. So we feel overall we're very prepared. At this point, we'll have to just watch and wait and see where the storm ends up.
Secretary, let's move out to California, where there have been these brownouts, basically power going down at various times because it's been very hot, without a doubt. What's going on there? Is there some more fundamental problem?
Oh, absolutely. There's no question about it. California has a long history of getting energy policy wrong. You may recall the blackouts, the brownouts from 2001. There was a market issue back in that point in time where people were manipulating the market, but they were manipulating it because of the wrong policies that California chose to implement at that time. We're seeing some of that replay today. What California has decided to do is to move to a 100% renewable energy generation world. The challenge with that is that, when the wind doesn't blow and the sun doesn't shine, yet people want electricity, it isn't there. So their overall strategy is to borrow electricity or buy electricity from their neighboring states like Arizona and Nevada. The challenge, with that strategy is that when it's hot in California, sometimes it's also hot in Arizona and Nevada, and they may choose to keep their base load power and keep their electricity because they'd like their hospitals to run just fine and air conditioning to work there as well. So there's nothing to sell to California. And that leaves California in the awful position of having to turn off the lights in certain parts of the state in order to meet their energy needs.
So that takes us to that fundamental fork in the road right now, at least between Democrats and Republicans, over renewables and avoiding emissions on the one hand and really relying upon fossil fuels for energy independence that I described.
Right.
At the same time, the Pew Center did a study back in June and said that 60% of Americans really are concerned about climate. I will say it heavily skews toward Democrats. Democrats and Republicans see this very differently. Can we have a bipartisan energy policy in this country?
Sure you can. I mean, natural gas is a very clean source, and we're developing technologies here at the U.S. Department of Energy to make it even cleaner. We're also developing technologies to make, carbon-intense fuels like coal even cleaner. And of course, we always, have had nuclear power for the last 70 years, which is entirely emissions-free. So, I mean, you can do both. You can have a renewable generation base, and you can have an emissions-free baseload generation available to you. You just have to choose to do it. And I think that's what the fundamental problem is in places like California. They've relied too heavily or focused too heavily on renewable power like wind and solar at the exclusion of some of this base load power, which you absolutely need in today's world to ensure that you have the energy you need when you need it.
President Trump's administration has done a fair amount in trying to really, as I say, reinforce energy independence for the United States, relying in part, in significant part, on fossil fuels. What's left to be done if he's elected for a second term? What's on your agenda?
Well, we need to continue to build out infrastructure. So, as you and I have discussed in the past, we have done a great job in America of increasing our production, making ourselves energy independent, relying on new technologies or newer technologies like horizontal drilling and fracking to allow us to increase production of these resources here in the United States. Our challenge today is actually getting the product to market. It's building out pipeline infrastructure to get it to the oceans, to get it to the coastlines. It's building export facilities so that we can make this oil and gas available to the rest of the world, because they're going to continue to use these types of fuels for the foreseeable future, perhaps as many as 40 to 50 years out.
That was the U.S. Energy Secretary Dan Brouillette on hurricanes and the first rolling blackouts or brownouts, as they were referring to, in California in almost 20 years. With us to discuss from San Francisco is Bloomberg's Ed Ludlow. Very good to have you with us, Ed. How much is California's renewable energy policy then to blame for the outages? That was certainly the line we were getting from the Trump administration there.
Well, it certainly demonstrated that achieving a 100% carbon-free energy policy is harder than it looks. I mean, California is very reliant on solar energy during the daytime hours, and we have a lot of sunshine here in the state of California. The issue of the last week or so is that it was a case of unprecedented demand meeting, unusually low supply, and it was a case of, during a heat wave, consumers turning on their air conditioning at home in the evening at a time where many more of us are at home for longer periods because of COVID. And as the Secretary explained, California's policy beyond using renewables in the daytime is to import energy from neighboring markets like Arizona, for example, but they too have suffered the consequences of the heat wave. It's also pursued this policy over the last decade of decommissioning natural gas power plants on the idea that they contribute to pollution of the ocean because they use seawater as a coolant system. So they were given the option of changing the coolant system or shutting down, but because they were not profitable, they chose to shut down. So there is a shortfall basically in the energy that California is creating. A kind of broader, bigger issue that the last week has raised is also energy storage. You know, there is a lot of solar, there is a lot of wind, but there's definitely a deficit in the battery capabilities of the state to store the energy that it generates. And that's something that policymakers have been focused in on in recent days. You know, there are big ambitions in California. They want to work towards 12 gigawatts of batteries. Moody's Investor Service reckons that's going to cost around $19 billion. And to give some context, in the whole of this year globally, we're only expected to see energy storage grow by around a third of that target. You know, so we still have a long way to go, and the state's finances are not exactly in the strongest shape because of the strains of COVID, of course.
Well, it's interesting, I mean, because Ed, you're on the forefront of our battery technology reporting for Bloomberg out there on the west coast of the U.S. as well. How does energy policy look, you know, for California, for America going forward or after this?
One of the issues is that the battery enthusiasm is largely driven by electric vehicles, right? Not by the storage component. It is the lesser talked about element of Tesla's business, for example, but there are many other options out there. It's just not the sexy option, basically. You know, we had the state governor, Gavin Newsom, concede that the reality of this last week is that California needs to go back and readdress the balance of how it brings in its energy. But reading the Bloomberg NES analysis in response to what's happened, you know, there is a big focus on storage and that there needs to be investment in battery if renewables to be a success. What's interesting, you know, looking at Biden's policy, he wants 100% clean energy in the U.S. by 2035. That's 10 years in advance of California's target, which is 2045. And we've certainly seen, you know, Republicans poke holes in that over the last week, pointing to, you know, in America's most populous state, its richest state, the idea that we're having shutdowns seems a bit, I guess, somewhat farcical. But yes, there is definitely an acceptance here in California, at least, that there needs to be a rebalance to go back and look at the policy and see what other kind of base demand options there are to keep the lights on.
Yeah, interesting stuff. Ed, thanks very much for joining us. And of course, the blackout's not the only problem California is facing, also the wildfires. We'll talk about that another time. Ed Ludlow, thank you so much for joining us there from the US West Coast. Coming up on the program, trading the stay-at-home economy. For the first time, European exchange-traded funds tracking the NASDAQ have attracted more money this year than funds tracking the S&P 500. You can hear more about that on our weekly show, ETF IQ Europe. That is at 9:30 a.m. UK time. Welcome back to the European Market Open. 45 minutes into a trading session for European equity markets that looks to be broadly positive. The UK FTSE 100 underperforms a little, down 0.2% everywhere else to the upside, it would appear. Now, ExxonMobil's exit from the Dow Industrials is the latest move in a seismic shift taking place in the energy market. This year's rally in exchange-traded funds specialising in clean energy is so big, it's even leaving peers in the ESG sector far behind. Invesco's solar ETF has gained 75% this year, while the S&P Global Clean Energy Index has climbed 41%. Compare that with an advance of 6.5% for the broader S&P 500. Joining us now is Arma Siri, Janus Henderson Investors Sustainability Analyst. And Arma, really good to speak to you. We were hearing from the US Energy Secretary earlier on. He was talking about the challenges that California faces, having made the switch to 100% renewables. He was very critical of the decisions they've made around the base load. Do you think that, but what I've just read there clearly suggests there's a lot of investor appetite for renewable energy and for cleaner energies right now. For places like California struggling with these decisions and blackouts that have followed, what does the future of energy policy need to look like?
I think that the policy needs to be what we would call a just transition. So there is no reason to not transition away from fossil fuels because that is the way that things are going. And we've got to move in that direction. And California has been hit by these horrible forest fires year after year. So I can completely understand why they don't want to be associated with something that is contributing to these natural disasters. However, there has to be a just transition, and most sustainable investors would agree that we can't have a situation where we go from one technology and that is contributing to forest fires, but go from another technology which is then contributing to blackouts. There has to be some sort of middle ground. And I think with some of the statements that have been made earlier, that middle ground could be struck by having cleaner base loads, as well as eventually moving to 100% renewable technologies.
You know, it's not just forest fires that are out of control. We see more and more natural disasters in the form of hurricanes. Hurricane Laura is about to hit the Gulf Coast. How can investors confront this kind of climate change?
Well, there are several things that investors should be looking at, and I would say that this is now gone beyond ESG. This is now looking very much firmly at fiduciary duty, because you're going to be losing money if you're exposed to these areas. So one thing that I would encourage investors to be looking at would be climate change exposure, and we've seen efforts towards that in terms of the recent TCFD, which Michael Bloomberg himself has been a part of. But we've also seen that more mapping has taken place to show where certain areas are repeatedly being hit by these natural disasters. The question really has to be, as an investor, do you want to be involved in or exposed to an area that is constantly being hit by natural disasters and seems to not show any resilience to those natural disasters? And I think the key word there is resilience. Because we've also seen that there are countries out there that have natural disasters but have resilience measures in place. But we're not seeing resilience measures in place here.
Arma. Yeah. Arma, can I ask you about the circular economy? It's something we've talked about with guests a number of times, and you seem to be impressed from what I've been reading with what Nike and Adidas and others in that sports leisure wear market are doing on that front. When you look at companies like that manufacture though in emerging markets often, do you ever find that companies in that sector, away from those specific ones, companies in that sector, they might be doing something that's good on the environment, but then they fail to meet your criteria in terms of paying decent wages? I mean, what's the contribution of businesses such as that sector in terms of ESG?
I would say that for us, especially for our sustainability products, we are always looking at continual improvement. So we recognize that there is no such thing as a perfect company. Companies are on an improvement journey, and as long as we see that continual improvement, those are the companies that we want to invest in. So in the case of a company like, for example, Nike, we have seen that continual improvement with efforts being made to clean up their supply chains, efforts being made to make sure that they're being a lot more transparent with how they do business, and also now creating circular goods such as a shoe that can be taken, worn completely, sent back to the company, and 100% of that shoe is then made into a new shoe. That is revolutionary. These are the things that can really help with regards to solving a lot of our climate and environmental issues.
Yeah, when I look at the fashion industry, my biggest concern, though, is the human trafficking and the labor issues there. How do you confront those as, important pieces of the S in ESG investing?
They are as important as the E. And I think one of the things that we have been doing very heavily is to not only look at what companies have been doing, but also to speak to companies about where we see issues in their supply chain. So, for example, we have spoken to Nike with regards to supply chain issues in the past, and we will continue to speak to them. We've also been doing a lot of work, especially in the tech industry, with regards to speaking to companies such as Microsoft and Tesla with regards to their exposure to cobalt mining, which again, these companies have shown that they are moving more towards cleaning out those supply chains. I think with supply chain issues, one of the things that we are seeing is that it's not easy for a company to completely mitigate against all of these abuses, because there have been efforts made to actually prevent transparency, even in those countries. And part of that has been that a lot of these countries, for example, the Democratic Republic of Congo, being a key one for cobalt, are afraid that they're going to lose business because companies don't want to be involved in these kind of industries. So what we're now seeing companies saying is, okay, help us to be more transparent, help us to show to our customers, our investors, that you are doing the right thing. Help us to put in those tools and things in place.
Alma, thank you so much for your time. Really good to speak to you. Alma Siri, Janice Henderson Investors Sustainability Analyst. Come back and speak to us again in the future. Coming up on the programme, what's the impact of a sliding euro on emerging market currencies? We'll look at FX. This is Bloomberg.
Almost an hour into trading today. We're seeing kind of mixed markets here, but we're headed out to Bloomberg Radio. So tune in on London DAB Digital. This is Bloomberg.
Stocks stall near global records after the S&P and the Nasdaq composite closed at fresh highs. Larry Kudlow praises the market at the Republican National Convention, even as consumer confidence plummets. Oil holds at a 5-month high as Hurricane Laura nears the U.S. Gulf Coast. Mass evacuations take place on fears that the storm could drive 30 miles inland, causing massive damage. And more stimulus. France intends to present a €100 billion plan. And you've got Germany, well, they're extending job-preserving subsidies until the end of 2021. Welcome to Surveillance. I'm Yusuf Gameneddin in Dubai. You have a situation in global markets where incremental news around trade, around the coronavirus, and around stimulus is helping some of these assets continue to trade to the upside. For the Stock 600, it is up 1/5%. You've got record highs in the United States overnight, helping with the overall picture. U.S. 10-year yields, we are at 70 basis points. A little bit of change there. The robust 2-year Treasury note auction overnight. You're looking ahead to a 5-year auction of $51 billion of notes. And then you've got the Australians. They were able to sell 21 billion Aussie dollars worth of bonds, smashing records. Dollar yen currently at 106.31. The folks at JP Morgan are saying we could see 100 if Shinzo Abe and Donald Trump bow out. So that note making the rounds a little bit. And then WTI, as mentioned at the top of the show, this is a 5-month high I mean, again, remember that the hurricane is likely to hit some of America's largest oil refineries, which would imply a shutdown for months, $18 billion in potential damages. Well, coming up, trading the steady standoff of the home economy for the first time. European exchange-traded funds are tracking the NASDAQ. They've attracted more money this year than funds tracking the S&P 500. You can hear more about that on our weekly show, ETF IQ Europe. That's going to take off in 30 minutes' time. Now let's get to the Bloomberg First Word News to get you to some of the other stories we're watching. Germany's extending that job aid program that has kept millions of people from unemployment. The subsidies were originally intended to last for 12 months. Now they'll be provided until the end of 2021. According to the IFO Institute, about 5.6 million people were on the benefits in July. That's down from 7 million in May. The second night of the Republican National Convention was capped by speeches from Secretary of State Michael Pompeo and the First Lady Melania Trump. Pompeo sparked controversy for his recording of the speech during a visit to Jerusalem. The department prohibits political activity while on official travel. We had a third night of unrest in Wisconsin. The governor has declared a state of emergency after businesses were vandalized and dozens of buildings were set on fire. It was sparked by police shooting a black man, Jacob Blake. His family's lawyer says it would be a miracle if he ever walks again. It's the latest U-turn in the UK government's coronavirus policy. English children over the age of 11 will have to wear face masks if their school is in a high-risk area. That includes when moving around the building and in communal areas. They won't be required in classrooms, though. In less risky areas, it will be up to the school to decide if masks are necessary. That was your First Word News Bell. Now let's get back to some of the market action. And the rally that we mentioned at the top of the show is hitting a bit of a pause. Point to reflect at the S&P and the NASDAQ. I mean, they were at fresh highs overnight. Larry Kudlow praised the stock market at the Republican National Convention, even as consumer confidence did plummet. Joining us now is Tanas Papasavas. He's the CIO at ABP Invest. Welcome back to the program. So let's get your initial read then on the data we had overnight and the fact that, I mean, risk assets are still pushing record levels, especially U.S. equities.
Yes, definitely. I think we have had a further confirmation, if you like, of the policymakers' decision and decisiveness to provide the stimulus. The results on the data coming out of Germany following the GDP numbers show the commitment, for example, that the German government has in terms of providing further stimulus for the furlough programs. This is going to be continuous, whether it's going to be the UK, whether it's going to be the US. I believe that policymakers are significantly convinced that further stimulus is required to avoid any potential social tensions which mass unemployment could create. So we do believe in the recovery. We believe that the economies will recover, but in our view, it's going to be more of a U rather than a V-shaped recovery. Simple reason that we have a significant number of SMEs, the small and medium enterprises, which rely on the broader economy.
Yeah. I mean, I appreciate that there's a lot of cheering on of new stimulus packages, and the market appreciates that. But then the rational side in me kind of asks the question, well, these are staggering amounts. Who's going to pay back that and when?
There is a very interesting philosophy which is coming out, the school of thought on MMT. And in their view, it's not about a matter of debt and deficit. This can be expanded as long as there's no inflationary issues and inflationary problems. Well, in my view, I do expect inflation to come back. People may say, well, we had the global financial crisis and the stimulus. Inflation was never a problem. I think this time it's different. Number one, I believe we have receding globalization. So supply chains are going to be coming closer to home, raising cost. Second, the broader, I think, tensions will continue. Whoever comes into the White House, I think the tensions with China, between the US and China, are likely to continue moving forward. Third, in terms of the massive stimulus, it's uncomparable to what we had at the GFC, both from the fiscal and monetary point of view. And last but not least, it has not been directed only at the banks, but more broadly across the SMEs and households. So I do believe inflation is going to be coming back, not 2020, 2021 onwards, on the back of that.
I mean, that's the issue, isn't it? Because you look at where investors are positioned, and they're long in excess of $100 trillion of bonds yielding less than 2%. That means that they are betting on disinflation, on deflation. They're not betting on inflation, and that in turn means that there could be quite aggressive repricing if your kind of scenario does play out.
I agree with you. I think that the market has been very much focused on the low yielding, the receding yields, and there has been a significant trend and momentum towards that. However, in my view, as inflation were to sort of gradually start to reappear, we would expect the yields in the govies to start rising. But we do prefer, for example, within the fixed income market, US high yield. We think that US high yield offers good levels of risk return potential. And we went positive back in March, just before the Fed's announcement on the US high yield, and we've maintained that exposure throughout. But going back to the point of inflation, I think it does not mean that the central banks are going to be starting to raise rates in the interim. I think they will accept some signs of inflation. Inflation will be stickier this time around. Again, highlighting it's going to be from 2021 and the second half of 2021 onwards. I think inflation will be stickier rather than transient this time around, and it will have an impact on the government bond yields.
Sure. I mean, Thanos, we had news, of course, that the Chinese are reported to be set to buy a record amount of American soybeans after reaffirming their commitment to the phase one part of the trade deal. This is really an upside kind of scenario that probably wasn't really priced in. Your take on that?
This is, I think, in my view, this is political, helping the U.S.-China relations on a personal level, potentially helping Mr. Trump or President Trump to get his ratings up ahead of the election. So I think this is a bit more on the electioneering. If that were not to take place, I think that could be an opportunity for Trump to sort of rattle the cage of China, but also expect volatilities to come through in September, October, if the differentials between Trump and Biden do not narrow. So although China is being used at now, I think that would be an issue going forward.
Thanos, I really appreciate your views. Always a pleasure to catch up. That's Thanos Papasavas. He's the CIO at ABP Invest. Well, up next, we're going to be getting into a conversation with the Kingdom Holdings CEO, Talal Mayman, after the company posted a quarterly loss due to the pandemic. That's next. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gamaluddin in Dubai. Well, Saudi Arabian billionaire Prince Al Walid bin Talal's Kingdom Holding reported a loss for the second quarter of 1.13 billion Saudi riyals as the coronavirus took its toll. That's a sharp turnaround from a profit a year earlier. The investment company is known for its stakes in a wide portfolio of industries that includes everything from the Four Seasons to Uber and JT.com. Joining us now is Talal Ibrahim Al-Mayman, the CEO of Kingdom Holdings. Talal, run me through then the highest priorities for you in terms of making changes to your portfolio to make sure that you are in a better position to weather some of the challenges that are yet to come.
Thank you for the interview. I think you know that Kingdom Holding Company is invested in 14 sectors and 14 sectors, diversified sectors of the economy, of any economy that is. The thing is, having to change structurally our portfolio is really not on the table because we believe we are diversified enough. The only issue here is this COVID-19 is an epidemic that no one's seen before. I mean, this is the first time where the whole world is facing one enemy and one enemy only. It's the disease. So, and everybody is now focused on the finding the right medication to counterattack this unbelievably dangerous disease. So in the sense, all we're doing now is actually focusing on our portfolio to cut any fat, to reduce expenses, to control slow down on capex. So we're really controlling the cash flow of the company, which is in an excellent position today.
So do you have any targeted exits that you've planned as well? So you mentioned your operational cutback. What about locking in some of your more profitable investments? Is that on the table?
No, actually, we do not have a timeline on exiting any of our investments. It is actually the performance of that investment itself. So yes, everything is on the table. We're an investment company. We're an experienced. We've been around for 40 years since His Royal Highness started the company, and we're just gonna wait for the right prices of our investments to exit some of them, and maybe in some areas we might actually increase our investments.
I mean, you've seen this rally in tech stocks in the United States and other parts of the world. Do you think that they're overvalued at this point?
For sure. Everything, in my opinion, is overvalued. It's due to huge sums of money that the government of the United States have actually helped the markets with. I think the election year is adding to maybe some kind of a doubt. What's going to happen? Is it who's going to win, what party, and so on and so forth. But for us, actually, we believe that the markets are really exuberant in the United States versus Europe. We believe Europe is actually a much better place to invest in at this time due to really reduction of a lot of the great companies' share price.
So where exactly in Europe are you looking to find some opportunities? Okay, do you have any more details on that?
No, I don't actually. We're basically looking in the UK and in the Eurozone. So, I mean, we've covered Europe just now. So basically, okay, we're looking for something we're not invested in, and actually to add to our diversification, which is, like I said, 14 sectors is a huge number of sectors for any company to invest in.
What's your read on the Saudi economic recovery? Is that going to be ahead of the rest of the world or in line on the rest of the world? What are you seeing in the numbers from the businesses that you run, and what are you hearing from some of your peers?
Okay, I don't really have a crystal ball here, but for sure, Saudi Arabia enjoys a lot of benefits that a lot of the countries don't, like low debt, low public debt, strong credit ratings. We also have high foreign exchange reserves. We have low cost of oil production. All this should add to the speed of recovery in Saudi Arabia, which will add a lot of benefits to the companies operating here.
And then for investors, specifically in your shares, any guidance on the dividend?
Yes, we are maintaining our dividend policy. We, for the whole year of 2020, we are going to review this again. As usual, we do that every year, not because of this exceptional year. We believe, again, and I repeat, this what happened is exceptionally unbelievable, and we do not expect this to continue forever. So we believe by end of the year things will be clearer. There will be hopefully vaccines, and we'll go forward hopefully.
Talal, thank you very much for making the time. Great to see you. Talal Ibrahim Al-Mayman, he's the CEO of Kingdom Holdings. Coming up, as Hurricane Laura bears down on key crude refiners in the United States Gulf Coast, we hear from the U.S. Energy Secretary on whether the industry is prepared to weather the storm. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. All right, let's get into the story around Hurricane Laura because it is bearing down on key refining facilities on the U.S. Gulf Coast. It's supposed to become a Category 3 storm when it comes ashore along the Texas-Louisiana coastline on Wednesday. But the U.S. Energy Secretary says the industry is ready.
We are very prepared for this hurricane that's seemingly moving into this Houston, southwest Louisiana area. As you know, the Houston Channel is there. Port Arthur, big, huge refinery is down there. Several other important pieces of our oil and gas infrastructure are down there. We have a specialized office here at the Department of Energy that is directed by an assistant secretary that is responsible for our CAT response. Their teams are already evaluating this. We're working closely with the industry. We feel that the industry is very well prepared for this type of storm. In addition to that, the president has directed me to make available the Strategic Petroleum Reserve in instances like this. That's what it's there for. We are doing all that we can to ensure that we are capable of doing that immediately following this storm. So we feel overall we're very prepared. At this point, we'll have to just watch and wait and see where the storm ends up.
Secretary, let's move out to California, where there have been these brownouts, basically power going down at various times because it's been very hot, without a doubt. What's going on there? Is there some more fundamental problem?
Oh, absolutely. There's no question about it. California has a long history of getting energy policy wrong. You may recall the blackouts, the brownouts from 2001. There was a market issue back in that point in time where people were manipulating the market, but they were manipulating it because of the wrong policies that California chose to implement at that time. We're seeing some of that replay today. What California has decided to do is to move to a 100% renewable energy generation world. The challenge with that is that, when the wind doesn't blow and the sun doesn't shine, yet people want electricity, it isn't there. So their overall strategy is to borrow electricity or buy electricity from their neighboring states like Arizona and Nevada. The challenge, with that strategy is that when it's hot in California, sometimes it's also hot in Arizona and Nevada, and they may choose to keep their baseload power and keep their electricity because they'd like their hospitals to run just fine and air conditioning to work there as well. So there's nothing to sell to California. And that leaves California in the awful position of having to turn off the lights in certain parts of the state in order to meet their energy needs.
So that takes us to that fundamental fork in the road right now, at least between Democrats and Republicans, over renewables and avoiding emissions on the one hand and really relying upon fossil fuels for energy independence that I described.
Right.
At the same time, the Pew Center did a study back in June and said that 60% of Americans really are concerned about climate. I will say it heavily skews toward Democrats. Democrats and Republicans see this very differently. Can we have a bipartisan energy policy in this country?
Sure you can. I mean, natural gas is a very clean source, and we're developing technologies here at the U.S. Department of Energy to make it even cleaner. We're also developing technologies to make, carbon-intense fuels like coal even cleaner. And of course, we always, have had nuclear power for the last 70 years, which is entirely emissions-free. So, I mean, you can do both. You can have a renewable generation base, and you can have an emissions-free baseload generation available to you. You just have to choose to do it. And I think that's what the fundamental problem is in places like California. They've relied too heavily or focused too heavily on renewable power like wind and solar at the exclusion of some of this baseload power, which you absolutely need in today's world to ensure that you have the energy you need when you need it.
President Trump's administration has done a fair amount in trying to really, as I say, reinforce energy independence for the United States, relying in part, in significant part, on fossil fuels. What's left to be done? If he's elected for a second term, what's on your agenda?
Well, we need to continue to build out infrastructure. So, as you and I have discussed in the past, we have done a great job in America of increasing our production, making ourselves energy independent, relying on new technologies or newer technologies like horizontal drilling and fracking to allow us to increase production of these resources here in the United States. Our challenge today is actually getting the product to market. It's building out pipeline infrastructure to get it to the oceans, to get it to the coastlines. It's building export facilities so that we can make this oil and gas available to the rest of the world, because they're going to continue to use these types of fuels for the foreseeable future, perhaps as many as 40 to 50 years out.
And that was the U.S. Energy Secretary Dan Brulette. Well, here's what's happening with some of the energy plays, WTI and Brent, both holding at these 5-month highs. Coming up, we're going to get into everything you need to know from the ETF world. ETF IQ Europe is up next. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF IQ Europe. I'm Yusuf Gemeluddin. Over the next 30 minutes, we'll be your guide to the region's thriving market and exchange-traded funds. Everything you need to know about the funds and the flows. European ETFs tracking the Nasdaq.
I'm placing a new order to buy euro at 118.135. New order placed. Buy euro at 118.135. 118.135. Okay.
Europe's retail investors pour money into thematic ETFs. We'll ask if they're a good way to target a trend. Well, let's kick off with the rise of the stay-at-home economy trade. European investors have been piling into an exchange-traded fund that tracks the tech-heavy Nasdaq. It's a household name. It's your Invesco Triple Q Trust Series 1, which counts Apple and Amazon as its top holdings. That's received nearly $2.4 billion of inflows this month.
Position opened long at 118.135.
Is Athanasios Sorafagis from Bloomberg Intelligence. So how large are the Nasdaq ETF assets when compared to some of the S&P 500 ones?
Hi, Yusuf. Good morning. So, yeah, the Nasdaq, given how strong its performance has been, it's predominantly underrepresented in assets, both in Europe and in the U.S. So to give you some context, there's about 100 billion in S&P 500 products in Europe, and there's only about 16 billion in Nasdaq products. And when you sort of look at some of the reasons why, traditionally a lot of people and investors, active managers, are just benchmarked towards the S&P 500. They don't really use the Nasdaq 100 as a benchmark. But this year, given how big the performance differential has been, so for example, the Nasdaq 100 is beating the S&P by 25% this year. People have been forced to notice like the strong performance of it, and you're seeing it in the flows. And this is really odd for the most part because there's just less Nasdaq 100 products. The universe just tends to be dominated by the S&P 500. So to be able to see the Nasdaq flows outpace the S&P is actually quite an accomplishment, given that there's so fewer products. But the way the Nasdaq is constructed, it's just been a benchmark that's been more conducive to this current environment. It's tech heavy, it's healthcare heavy, there's no financials. It's just been a benchmark that's just been able to outperform the S&P, and people are taking notice of that.
And how has this all translated into equity flows overall compared to other areas?
Yeah, so what's interesting, and given the performance of the market since the bottom, so for example, the stock 600 is up 35% since the March bottom. Flows to equity products have been really underwhelming compared to the other asset classes. Everyone really poured into fixed income, and a lot of that was led by support by the central banks globally into bonds, and that's really translated to flows for that. But what I think is if the Nasdaq continues its performance and we see other areas like thematics continue to do well, the relative lagging of the equity flows are going to catch up. later in the year. Just the fourth quarter tends to be heavy for equity flows, and I think that given how underwhelming they've been, you might see people performance chasing. They might start to pile in more into the NASDAQ or more into these thematic products, and I think that you're going to see equity flows jump up. And to give you context of all total equity flows in Europe this year, the NASDAQ products have accounted for 30% of all those flows. So there seems to be this motion towards chasing performance. And I think if that performance continues, you'll see equity flows turn up later in the year.
Athanasios Sorophagas from Bloomberg Intelligence, thank you for those insights. Let's get some additional perspective. Joining us now to discuss all of it all, it's Matteo Andretto. He is the EMEA head of SPDR ETF business at the State Street Global Advisors team. I want to get really into the thick of it because the question becomes, are we going to see more reallocation into some of these technology trackers if individual tech stocks outperform?
Hi, good morning, everyone. Yes, for sure. I think that's exactly what we expect. We expect investors to keep using sector ETFs over the next few months, especially ahead of the U.S. election, for their reallocation post-summer. And we clearly expect a continuous trend into technology and potentially also into healthcare. If I might just point out also one additional observation regarding the NASDAQ 100, clearly there is a strong outperformance that is driven by the tech component of that index. But also investors have to realize that by buying NASDAQ 100, also they expose themselves to other sectors that maybe they don't necessarily want to have exposure to. There is a particular portion of healthcare or a portion of industrial and engineering where I'm not sure that they will necessarily benefit from the current trend and the current positive fundamental underlines that we are seeing necessarily in technology.
I'm beginning to wonder whether a lot of the other newer, smaller, more creative tech ETFs are going to be able to replicate the kind of success we've seen in the triple Q. I'm thinking along the lines perhaps of some that are sort of trying to build on, say, what's happening in the cloud space. Or is that something that for a wide variety of reasons is very unique to the structure of the triple Q?
Well, there are some very interesting aspects of when you start looking at the sector ETFs, the triple Qs, so the NASDAQ 100, and clearly all these thematic products. And really, we have to go into the details of how the index per se is constructed and the underlying basket is defined. The problem with some of those thematic ETFs are clearly that the basket, so the underlying securities, are predefined when the basket is created. And therefore, there is very little possibility of capturing new emerging technology, new emerging companies that will eventually enter the basket. Really depends by the index methodology and what type of reshuffling, what type of rebalancing the index really is subject to. When we are really looking into a cap-weighted index, if it is technology in particular, because that's what we are really want to have exposure in the current trend, because clearly technology is what is changing the way we behave, the way we work.
Open profit for euro at 118.155.
Capture all those new emerging companies that will eventually be part of the index straight away without necessarily having the constraints of the top 100 companies that are listed on NASDAQ. Also because the listing value, it is very important, and clearly NASDAQ has a strong history of capturing some of those companies, but potentially they may eventually be listed somewhere else.
As much as the triple Q was able to lock in a sizable amount of inflows, you put that in perspective and you look at how that compares to exchange-traded products in the fixed income space. And the message that really comes from that is investors are still quite risk-averse. And how do you explain that?
Well, there is clearly, I think, a very strong difference of what we have seen so far in the type of themes that are played through the equities and through fixed income. In fixed income at the moment, the two major themes are, one, the continuous chasing for yields, and therefore we have seen significant flows into investment grade and the corporate market. in particular, both in Europe and in the US, but also the underlying trend, that the underlying theme that is clearly investors are still developing is don't fight the Fed. So we know that the Fed is active in the ETF market. We know that the Fed is active in directly buying securities through their program, and clearly that is that there is a very strong underlying theme that investors still want to exploit without taking additional risk to their portfolios. In equities, I think is a different situation. The Fed is not buying equity, and it's not supporting the economy in the way the way Bank of Japan has been doing for many years in Japan by buying direct stake into listed companies. And therefore, what investors are really focusing on is what has changed since the COVID crisis. And what are the implications of that? And clearly the two winning themes of that is technology and healthcare, and the relevance of those two sectors to the overall economy.
We'll pick that up shortly in more detail. Matteo Andredo from State Street Global Advisors stays with us. Here's a bit of a snapshot then of what is in the pipeline. Retail investors in Europe have been pouring money into thematic ETFs. We're going to ask if they're actually a good way to target a trend. That's next. This is Bloomberg. This is Bloomberg ETF IQ Europe. Everything you need to know about the funds and the flows. I'm Yusuf Gameneddin. Thematic ETFs are touted as an easy way to target a trend, investing in things as diverse as video gaming, cannabis, and artificial intelligence. It seems European investors are finally getting on board. So far this year, more than 9 billion euros of the equity products have been bought and sold. That's more than double the volume in the same period last year. Joining us now is Bloomberg's Simone Foxman. Simone, which ETFs then in the space have drawn the most interest?
Well, Yusuf, two ETFs, and these have to do with video gaming and computing. One, the VanEck Vectors Video Gaming and Esports ETF. That's up 62% year to date and focuses on that gaming graphics cards kind of component. Another, First Trust Cloud Computing. That's a little bit broader, more consumer names. That's up over 30% this year. And both of these capitalizing on this really meta trend of folks, particularly retail investors, sitting at home on their couch in their pajamas, trading in the markets, betting on folks at home sitting on their couch playing computer games.
And then you've got some excitement from retail investors translating to the broader European ETF market as well.
Yeah, well, so those thematic ETFs, the thinking is that this is really a retail play, but it's unclear that this is actually filtering through into the broader European ETF market, where retail investors just haven't been a big part of. Though the one place I would say you should look at if you are looking for a sign that the retail investor is gaining momentum is Vanguard ETFs, because they are a common tool of retail investors. And if you look at the Vanguard FTSE Europe ETF, you'll see that we've seen quite a strong series of inflows recently. In fact, the best day of inflows since 2017 happened just earlier this month. So some positive signs, I suppose, if you're looking for the retail investor to play a bigger role in this market.
Simone, thank you very much for those details. That's Bloomberg's Simone Foxman. Let's get back then to our discussion with Matteo Andredo from State Street Global Advisors. He's still with us. Matteo, I mean, as much as there's a lot of creativity in these new ETFs, especially that are trying to target European investors, the concern is that they're not going to generate enough liquidity, and for many investors, it could become a bit of a trap.
I think you're raising a very good point regarding liquidity of the instrument and the underlying basket. As we said, the devil is really in the details regarding some of these products and some of the mechanics for the inclusion of the new securities. So while on one side there is the possibility that if the rules allowed, new securities, so new emerging companies could potentially become part of the basket underlying the ETF. At the same time, liquidity will really be a challenge. And that's the reason why we will be extremely cautious, in terms of using them as a trading tools. We definitely see a space for thematics as part of the overall portfolio construction, and there are some of them where clearly, that you are exposed to the long-term benefit of some of those themes. But clearly, if you are really after a diversified basket of
position closed on euro at 118.155.
Technology ETF might be a significant better bet. On the same time, just an observation regarding some of those themes, we have seen a lot of interest as well of really developing of the identification of which themes are here to stay. Cloud computing, we talk about video gaming, but what about the ESG and the environmental, social, and governance? Those are clearly, that's clearly a big theme also in European ETFs, where we believe is going to be a significant driver of the growth of the market, and it's clearly something that is here to stay.
Matteo, can regulators do anything to help catalyze additional liquidity around European ETFs? Is there something they can do?
Well, it's a very good question. And if we look at our experience in the US as State Street Global Advisor and in the SPDR business, the ETF business, clearly, having been the one that launched the SPY, more than 20 years ago, we are clearly very close to the liquidity and what is necessary to become a significant liquidity player in one of our instruments. And clearly what is necessary is the creation of the overall ecosystem around the product. So the product has to be used and accepted for collateral and stock lending. A significant option part of that liquidity will also come from the option market. In Europe, some of those infrastructures and building blocks around the ETF UCITS market has not been necessarily developed yet. But it's also true that in Europe we are not as mature as the US market, so it's just a matter of time, and for sure we will see a growth driven also by those technical aspects of the ecosystem around ETFs.
Matteo, hold that thought, Matteo. We're going to get into some of your other calls shortly. Matteo Andredo from State Street Global Advisors stays with us. In fact, here's what's coming up. ETFs now hold more gold than People's Bank of China and the Bank of Japan as well. But who's making all the money? We'll discuss that next. This is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
This is Bloomberg ETF IQ Europe. Everything you need to know about the funds and the flows. I'm Yusuf Gemeliddin. Well, in California, the gold rush is the surest way that the fortune was set to be made in the pick and shovel business. Well, if it's 2020's gold fever hasn't an equivalent, then it is the ETF business, of course. They now hold more bullion than every central bank, with the exception of the Federal Reserve, and that is generating a lot of fees. Let's get more with our Bloomberg reporter, Justina Lee. Justina, who are the ones then benefiting from the boom in gold ETFs?
Well, most directly, you can imagine the boom is benefiting the ETF providers, which charge fees as a percentage of the value of their assets. You know, for example, Bloomberg has calculated that the total fees for the top 10 gold ETFs based on current prices are around $610 million a year. And for the top 5 silver ETFs is around $110 million. And kind of less directly, it's also benefiting, you know, the few big banks like JP Morgan and HSBC that hold the bullion on behalf of the ETFs in underground vaults.
I look at some of the other commodity ETFs, and I'm thinking around oil in particular, and what we saw with the U.S. oil fund earlier in the year, how quickly something that might seem mainstream and popular can run into trouble. What kind of hiccups have we seen when it comes to the surge in demand for gold products?
Yeah, it's been pretty interesting. You know, for instance, if we look at GLD, the most popular gold ETF out there, their report has revealed that starting from April, it actually owned some gold that was not at HSBC, but rather at the Bank of England. And that was because, you know, the pandemic made it harder for the BOE to move the metal quickly enough to HSBC's London vault. And, you know, at the same time, you know, there's also been a little bit of a problem with silver, which is bulkier and less valuable than gold, and also takes up a large amount of space in the vault. I mean, at the end of the day, the bankers and the logistics providers do say there is enough space, but it just kind of reminds you of, you know, the particular problems that comes from having physical assets attached to these securities.
Justina, thank you very much for those views. That's Bloomberg's Justina Lee. Let's get back into our discussion with some final thoughts from Matteo Andredo from State Street Global Advisors. Matteo, the real difficulty with some of these gold ETFs is that we might just be getting started in terms of their popularity. PIMCO sees current gold prices at actually quite cheap compared to their historical averages. So if we still have quite a bit of upside in the pipeline, can these ETFs handle another surge in demand?
I think that you're right. So what we are seeing is clearly a significant reallocation to gold as part of the overall strategic allocation and as a core component of the portfolio, the investment portfolios. Now, there are fundamental reasons why that is the case, driven clearly by, you know, the weakness of the dollar, very low rates, and the fact that the investors, retail, wealth, high net worth and institutional were structurally underweight to the commodity and really dragged the prices down for a prolonged period of time. What is going to be very interesting to note, to see, is how does that reflect the current dollar weakness, and how is that theme going to be played only through gold, which clearly, you know, being a real asset, should outperform in a weak dollar scenario, or eventually will migrate into other asset classes or other type of exposures. In a dollar weakness, clearly, you know, what should also outperform are small cap emerging markets debt, all things that are not necessarily popular at the moment, but we might actually see a significant shift of the investor attention away from gold because of the dollar weakness into some other assets that are sensitive or negatively correlated to a weak dollar, and that clearly might eventually come over the next few months. So you are absolutely right. We might see a continuous momentum was driven, and I think the significant flow that we have seen was driven by a structural underweight of that commodity in the asset allocation. But now the theme is really weak dollar, and now we're going to play for that.
Matteo, briefly, do you think those fees are going to come down for the commodity ETFs, given the competition?
Well, in general, what we have seen is clearly a contraction in fee and the repricing in the ETF market. It is something that it's for sure it's here to stay. We have always to be very careful and not just look at the total expense, the expense ratio, so the fees that are charged as part to manage the ETF, but also the total cost of ownership. Yeah. So what are the spreads that investors are currently paying in the market to trade that with those products?
Matteo, thank you very much. Really enjoyed our conversation. That's Matteo Andreino from State Street Global Advisors. Well, that's all we have for this week's Bloomberg ETF IQ Europe. We'll be back with more from the world of exchange-traded funds next Wednesday. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, all roads lead to Jackson Hole. Well, actually not. A virtuous Chairman Powell
He will speak to a virtual conference on the virtues of lower for very, very longer. Markets, meanwhile, stuck in the August doldrums. There is no stimulus, there's no income support. In substitution, how to calibrate economic growth in the next 12 months. And the secretary from Jerusalem, the first lady from the Rose Garden, it's an original convention as the president goes in search of the suburban voter. Good morning, everyone. Bloomberg surveillance from New York, from London. Anna Edwards, tour of duty here for Francine Lacroix in again today. Anna, I'm going to go back to what I mentioned yesterday or the day before, the remarkable story of the decline in deaths in the United Kingdom of this pandemic. I think it's been underreported. It is an extraordinary success for the nation to see those deaths come down.
Well, it looks good in comparison to the United States, I'm sure. I think comparisons across Europe may be a little more challenging to make and put in a positive light, and that's certainly been the focus. And the delay to locking down the country certainly was an area of real criticism for the government. I suppose this morning, though, Tom, we're also focused on what's going on nearer to you in terms of the Hurricane Laura building across the Atlantic and ready to make landfall. We're watching Louisiana, watching Texas, and with that in mind, we get this red headline across the Bloomberg from the Hurricane Center saying Laura is seen as rapidly strengthening to Category 4 hurricanes. This is new information this morning.
And that is a big number. Hurricane 4 is much bigger than a Hurricane 2. It's to be honest, not linear. 4 is getting very, very serious. And of course, this is the acceleration north across the Gulf of Mexico, buttressed up west of New Orleans as well. We'll have much more on that. We're thrilled that Rob Carolyn will join us here at one point. He is really, really quite good. In New York City, always quite good with our First Word News. Here's Ritika Gupta.
Morning, Tom. Anna. On the second night of the Republican National Convention, speakers tried to humanize President Trump and highlight his leadership. First Lady Melania Trump spoke from the White House Rose Garden.
I don't want to use this precious time attacking the other side, because as we saw last week, that kind of talk only serves to divide the country further. I believe that we need my husband's leadership now more than ever in order to bring us back once again to the greatest economy and the strongest country ever known.
Meanwhile, Secretary of State Mike Pompeo said the president has made historic progress towards Middle East peace. And as you were discussing, Hurricane Laura is threatening to inflict up to $18 billion in damages on the Texas-Louisiana coast. Winds are expected to peak at 120 miles an hour when the storm comes ashore late today or early tomorrow. The hurricane has already disrupted oil and gas production in the Gulf of Mexico, and it could keep some of America's biggest refineries shut for months. And in Wisconsin, the governor has declared a state of emergency. There was a third night of violent protests in Kenosha over the police shooting of a black man. Businesses were vandalized and buildings were set on fire. Meanwhile, shots were fired in a confrontation between protesters and a group of armed men. One person was killed and 2 were wounded. And that trade deal with China may pay off for farmers in the U.S. Bloomberg has learned that Beijing is set to buy a record amount of American soybeans this year. The total will probably be about 40 million tons. That's around 25% more than in 2017, which is the baseline year for the trade deal. China is taking advantage of a drop in soybean prices. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Anna, Tom.
Ritika, thanks so much. Doldrums in the market, but I do want to look at 2 things very quickly. Our renminbi comes in stronger today, really breaking down 6.8898, 6.89 right now. Number of yuan per dollar. That's a big deal to see strengthening in Chinese renminbi. On the yield front, and of course this goes to Powell's speech, the data check is simple. Here's the equation, a little bit of Wednesday math. The nominal yield is higher. Inflation expectations are higher as well and equally, and so the real yield, the residual of that is the same, negative 1.01% right now. So we've seen a lift in the yield, a lift in inflation expectations, and that gives you a stable real yield. Was that too much math, Anna?
Yeah, never too early for a little Wednesday maths update, Tom. On my data check, I've got the response we're seeing in markets here in Europe to confirmation of an extension to the furlough scheme, the Kurzarbeit scheme. Max will correct me on my pronunciation, that we've seen in Germany, supporting those employed in businesses that have been hurt by the pandemic, of course. And they've extended it for another year, Tom, which is significant. Does it set a precedent for Europe in any sense, or is this a German exceptionalism? We've got that supporting the Xetra DAX here in Europe. The euro, I put that in here as well. The euro is a little bit weaker actually today at 118.12, down 0.2% against a fairly flat dollar this morning. Also, I slotted in iron ore because our colleagues on the Markets Live team are talking about how they see signals that prices may drop here. They see a less tight supply story when they look at Brazil, Australia, and the stockpiles in China as well. Let's get to Max Kettner, HSBC multi-asset strategist, who joins us now, and he can tell us his thoughts on the extension of the furlough scheme in Germany. Max, how significant is this? How investable is this in terms of the German response?
Yeah, perhaps. I mean, what we've seen in the last couple of weeks and months, really, is actually that the German DAX was outperforming quite a lot over the, against all the other peers, whether that's France, whether that's, for example, against the broader Eurozone equity market. And that probably is also partly due to the very outsized response from the fiscal side in Germany that, if we look at the last 8-9 years, we really haven't got used to. So perhaps that has a little bit more room to run, yes. But overall, for Eurozone equity markets, I doubt there's going to be this very strong, rotation out of US equity markets into Eurozone equity markets. I think that's where the signal, just, an extension of a furlough program in Germany is not as invested as it seems, I think.
Okay, and is this something that only happens in Germany? Because Germany was well prepared for this in the sense that they already had this furlough scheme up and running as part of their general infrastructure. It's been employed before, hasn't it, Max? So is this something that only Germany does because it had it before, and also it has the fiscal depth to go ahead with this kind of extension?
Well, you've given the answers, right? That's exactly the point. I mean, Germany has used it after the global financial crisis quite successfully, together with the car scrappage package in 2009 and 2010. That's when you look at the numbers, when you look at the GDP numbers back then, that's what really helped Germany get out of the woods faster than Eurozone peers. And that's, the infrastructure is there. The problem also is with other countries, you've asked before, can other countries do that as well? I doubt that other countries, particularly on the peripheral side, have that kind of fiscal depth to really deploy that much of fiscal aid to extend any kind of furlough programs or other programs up until the end of 2021. I think that's quite unlikely, and that is perhaps a little bit more of a German special case.
Well, the German special case is about income substitution, and I guess, Max Kettner, it's about social policy as well. We've seen a huge deterioration in the United States just in the last 10 days here as the stimulus runs out, and as many people said, the excessive unemployment amounts have drifted away. Very simply, Max, define how economic growth, GDP, will be different given income substitution in Germany and Europe versus the process in the United States.
I think that's a very interesting question. If we go into, let's say, the third quarter data, but particularly also the 2021 data, think about, for example, the effect of the stronger euro now, right? The euro, the trade-weighted euro, has been up more than 7% since the low. That obviously will probably put a little bit of a lid on inflation in the Eurozone. It will put a little bit of a lid on growth also relative to the US. Whereas actually what we've seen, when you look, for example, at the Bloomberg consensus numbers for 2021, consensus expectations for US growth in 2021 have consistently been revised lower in the last couple of weeks, whereas the exact opposite applies for the Eurozone. So I think, for the Eurozone against US growth, not only from a substitution perspective, but particularly from a consensus perspective, it kind of seems like perhaps consensus has become a little bit too jubilant on Eurozone growth and a little bit too downbeat on the US.
Okay, this is a really important insight, folks. and this frames out perfectly to Jerome Powell in his speech tomorrow, Michael McKee, with our special coverage on Jackson Hole. If that's the case, Max, how does Jerome Powell address the inflation conundrum given the markdown in GDP growth that we're seem to be observing now? Bruce Kasman was on from JP Morgan yesterday saying exactly the same thing you are, Max.
Yeah, I think, to be quite honest, I think the job is relatively easy right now because it is going to turn out perhaps in the next couple of weeks already that the US is not as bad as we feared, particularly relative, for example, to Europe and the Eurozone. So we wrote a note a couple of weeks ago where we questioned really the end of this US exceptionalism. So the idea of US, let's call it US equities, but also the dollar really getting into a massive bear market. We're kind of questioning that. So I think Powell has a relatively easy task because I doubt there will be really a massive change in policy announced from Jackson Hole. I think it's probably going to be much more sort of a nuanced tweaking towards what we've really been seeing over the best part of the last 2 years anyway. So in that regard, I think Powell right now has a fairly easy job to do because consensus has become so incredibly bearish on the US, you know, whether that's with regard to the handling of the virus, whether that's with regard to relative growth, or whether that's also with regard to political risk. It seems like consensus is saying that everything's fine in the Eurozone, but everything's bad in the US, and that's just not the case.
Well, this is fascinating. Max Kettner will stay with us here with HSBC. Much to talk about. With a category shift here in the hurricane, to be honest, has been off my radar because all of a sudden it's gone from Category 2 out to Category 4. A Category 1 hurricane is a minimum 74 miles an hour, then up to 96 miles an hour. Category 3 is 111 miles an hour, and where we are right now is the anticipation of 130 mile an hour minimum winds for Hurricane Laura. All of a sudden, this becomes more than serious for the territory between Houston and New Orleans. Coming up on the Open, Michael Wilson, Morgan Stanley, their chief U.S. equity strategist. Futures mix, red and green on the screen this morning. Stay with us. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The president has held China accountable for covering up the China virus and allowing it to spread death and economic destruction in America and around the world. And he will not rest until justice is done. He has ended the ridiculously unfair trade arrangement with China that punched a hole in our economy. Those jobs are coming back home.
For our international audience, I cannot measure how unusual what you just saw is. To see a sitting Secretary of State, foreign and abroad, speaking within a convention, a political convention format, is truly original in America. There were many firsts last night at the second night of the Republican convention, but one of the great agreements last night, and frankly with the Democrat Party as well, is China. Max Kettner's with us with HSBC as we look at China. We've really had this off our radar the last number of days, Max. I'm glad to catch up on this. How much will trade change between China and Europe and China and America?
Yeah, I think with regard, for example, to the U.S. elections, I think very little will change, right? Very little will change with regard to U.S.-China trade relations. Perhaps there's a little bit more in terms of trade done. We've talked about Germany, for example. Germany has obviously traditionally been one of the most exposed to Chinese trade. So if you look, for example, just simply of the percent of exports to GDP or percent of exports of total exports to China. So that's where really Germany is coming in. I doubt that will be a transformative process in the very short run. I think it's just going to be a very sort of long run, drawn out process that we simply have to get used to over the next couple of years. It's not going to be suddenly going away with either of the two candidates with U.S. elections.
I don't have a chart available, Matt, but there's a world trade, the volume of world trade, which folks, and Catherine Mann at Citigroup has been really good on this, which is just simply rolled over the last decade. I mean, it's really a painful chart. Do you just continue to see world trade struggle, where in the aggregate and based on history it diminishes?
Yeah, that was one of probably the points that also contributed to this lower for longer period of the last 10 years. Because if you just simply look, for example, at world trade relative to world industrial production, you could see that world trade has always been lower. Or there's also been other measures, for example, it's very often really persisted that actually, you know, with trade tensions between the US and China over the last 3 years, everything just started then. But that's not the truth. If we look, for example, at trade liberalizing measures versus trade restricting measures ever since the financial crisis, we could see that every single year since the financial crisis, you could actually see that trade restricting measures have always surpassed trade liberalizing measures. So this sort of like demise of trade, or the sort of slowed down trend of trade, that's been going on for quite a while already.
Yeah, really interesting to trace the deglobalization impulse then back to the financial crisis, Max. That said, though, the poster child for European global trade in terms of indexes for stocks that we look at is surely the DAX, and it is the DAX that is closest to turning positive year to date here in Europe. What does that tell us about that strong relationship between Germany and China and the strength of it, given the strength we're seeing in the DAX right now?
You know what, I don't think that's necessarily really related to US-China. I think what that reflects is perhaps a bit of a transformation of European equity benchmarks as a whole. If you look, for example, at the DAX, or you look at the Euro stocks, a couple of years ago, we would have said, well, it's pretty natural because, you know, when you invest in the Euro stocks, or you invest in Eurozone equities as a whole, you're overweight financials, you're overweight the struggling sectors, whether that's financials, whether that's autos, for example, in Germany. That's been underperforming so much for the last 5 to 10 years that their weights have become less and less, whereas actually tech, for example, has become much bigger, and also, for example, in the German DAX, and that's what's helped really the German DAX, I think much less so than the US-China trade relations in that instance.
When you look at Europe as a whole, though, Max, do you see it? Are you excited about investing in Europe versus the US, thinking about the balance of value versus growth that we have here in Europe broadly?
Over the very short term, there might as well just be a little bit of rotation, because real yields have declined so much in the US. And, if we get a back up in yield, that is a bit of a rotation into value. Perhaps Europe will also benefit from that. But really looking, let's say, 3 to 6 months out, I highly doubt there will really be a substantial rotation from from the US into Europe, just simply because, we talked about it in the session before, where actually consensus expectations for Europe and for the Eurozone in particular are so extremely high, whether that's with regard to political risk, whether that's with regard to the EU's recovery fund, for example, whether that's with regard to the handling of the virus, whether that's also, for example, relative growth compared to the US. It's all really baked into expectations and baked into the price already. So I doubt that really there will be this huge rotation. And one thing we haven't talked about, if you look, for example, if you look at EPS revisions and you put them together with the annual change of euro dollar, and you look against Eurozone against US earnings revisions, you can already see that US earnings revisions are highly benefiting from this weaker dollar.
Okay, Max, thanks very much. Really good to speak to you this morning. Max Kettner, HSBC multi-asset strategist, joining us here on Surveillance. We talked about the conversation around inflation. That will be very topical at Jackson Hole. That's coming up Thursday of this week. Stay with Bloomberg for our full coverage of the Jackson Hole Economic Symposium, including, of course, Fed Chair Jay Powell's speech. That's tomorrow, 9 a.m. in New York, 2 p.m. in London. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
You're
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get your Bloomberg Business Flash. Palantir has broken years of suspense by filing to go public through a direct listing. The data mining company, backed by tech billionaire Peter Thiel, applied to list on the New York Stock Exchange. Palantir won't raise any proceeds in the listing, and it doesn't have traditional underwriters. Like many tech companies that go public, Palantir has never been profitable. Shares of Salesforce are rising. The software maker topped quarterly revenue and profit estimates. That's considered a sign that many corporate customers responded to the economic slump by upgrading critical technology systems. Salesforce also raised its annual revenue forecast. Teva Pharmaceuticals rejects U.S. government allegations that it conspired to raise prices for generic drugs. It's the most significant case to come out of a years-long investigation of price fixing by drug makers. 5 other companies have settled Justice Department charges and agreed to pay $426 million in criminal penalties. And that's your Bloomberg Business Flash. Tom, Anna?
Ritika, thanks very much for that. We're seeing a bid for some of the risk plays here in Europe, risk sentiment getting a boost essentially from the fiscal injection we see coming through from Germany, Tom. The extension of their Kurzarbeit scheme, really substantial and adding to appetite for risk here in Europe.
Quiet market here in America, red and green on the screen, but tech still elevated as well. Coming up, we're going to continue with the pandemic. We've got a wonderful guest. She is in the United Kingdom, but she is decidedly American out of Oberlin, and she is looking at the debate of science and non-science across America on this pandemic. Dr. Rohn will join us. Anna Edwards and Tom Keene, this is Bloomberg Surveillance. Good morning.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en 2 casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I believe it's natural after several weeks from the end of lockdown phase in countries like France, Spain, and Germany that there is a new significant circulation of the virus. The increase in cases and the data should not surprise us. The pressure on the national health services of these countries is very low if compared to recent months, and it highlights that we have to learn to cohabit with the virus. My opinion remains the same. We have to be quick and rapid to isolate cases, do a lot of tests, and try to govern this transition, which will last a few months at least, but will hopefully lead us to a vaccine.
That was the Italy Health Minister, Roberto Speranza, speaking exclusively to Bloomberg. Let's continue our conversation around the virus. For more on the latest, we're joined now by Jennifer Roan, UCL Principal Research Fellow. Jennifer, very good to speak to you. Very pleased to have you on the programme. We were hearing there from Italy about the use of local lockdowns to tackle the virus. Is that going to work all the way through winter, do you think? Is that a solution for winter in the Northern Hemisphere?
Well, I hope so. It does appear to be a good strategy. It seems to be working here in the United Kingdom. Once you've flattened your curve, you can just keep flattening it as little sporadic outbreaks come out. You use a localized approach so you don't penalize the entire country. I mean, in theory, this is a great idea. In practice, we don't really know what is going to happen when the cold winter months come, when the flu virus begins to circulate. We just don't know. But I think it's a good strategy for now.
Yeah. Yes, because here in Europe, many people are able to socialise outside at the moment. What happens when everybody disappears indoors, Jennifer? Let me ask you about the difference between the uptick that we're seeing in case numbers across Europe at the moment versus the earlier spring surge and the initial outbreak. We seem to see a younger profile to those who are infected. Now, how should we treat that? Should we be telling those young people to stay at home, or is the fact that we're not seeing deaths associated with to such a high degree a comfort?
It is interesting, this phenomena of the younger cohorts now getting infected. But still, there's an awful lot of people being infected, and these people can spread to more vulnerable people. I think it's a non-starter to have everybody stay at home, especially young people. But I do think social distancing and mask wearing will make a big difference. So, you know, the U.S.'s curve right now is starting to flatten a bit, but it's still a lot of cases. And we can have a lot of really bad effects in younger people that are not necessarily showing up in the stats. You can get really serious illness, long-term illness, and we don't even count these numbers, so we don't know how many there are.
Jennifer Roan with us, folks, and even though she is at UCL London, her pedigree in America is extraordinary. Out of Oberlin into the acclaimed University of Washington science effort out on the West Coast, just absolutely best in class. Jennifer, you're on fire on Twitter. I'm not going to mince words. You got a Fahrenheit 451 illusion. You've been writing up about science and non-science as well. The non-science crew has a timeline impatience. They just don't want to wait. What is wrong with being impatient about getting to a good outcome?
We do so much hard work. We've done so much really good work with lockdowns. We've flattened curves all over the place. And the minute you let up and you decide, oh, it's all over now, it just comes back. And it's going to keep coming back until we all get it under control. So I'm not saying we should all be sitting in our houses for the rest of our lives, but the people who don't want to wear masks simply baffle me. And even more, the people who are going to refuse to get a vaccine if we get one. It's nonsensical. Why not wear a mask? It's clear that mask wearing is reducing the number of cases. So I don't understand this argument at all.
Tell me about this debate, this confusion, this rather conflation of the search for a vaccine with antigens and also with plasma. These seem to be the words that amateurs talk about too much. To a pro like you, what are the risks of the conflation of different processes?
Well, it's important to be clear. You know, plasma Convalescent plasma is a long history of using that, but it's very limited. You take plasma from one person, you can't inoculate the whole world with it. And we actually don't know yet whether COVID convalescent plasma really is that useful. I mean, it's something to try, and people are doing tests, but certainly there's no hard and fast evidence yet that that's a good thing. Vaccines, on the other hand, you can inoculate the whole world with a really high boost of antigen. And actually, it's pretty much understood that if you get a natural infection, it's not going to give you as good as immunity as if you'd had a vaccine, which is specifically designed to really ramp up your immune system. So they're two different things.
Jennifer, one of our colleagues, Lionel Laurent, writing an opinion piece this morning saying that what we really need that would change the game is a more effective treatment. We've got a couple of things that have been used, have been developed, have been found to be useful in treating coronavirus. Are you looking at anything, we've talked about plasma, but are you looking at anything that could be really significant?
At the moment, we still only have these two drugs. There's a dexamethasone, it's cheap and cheerful, very old drug that seems to help to save some lives, a fraction of lives of people who are critically ill. And we have remdesivir, which is going to basically shorten the recovery time, but it is no magic bullet. That's all there is at the moment. We're looking at anti-immune compounds. Basically, these are things that might quell or try to quiet down the immune system, which is what is causing the serious complications for the people who end up in ventilators. But no, at the moment, although a lot of things are being tried, we still don't have any new leads on that.
Jennifer, thanks very much. Great to get an update. Jennifer Rohn, UCL Principal Research Fellow. Let's get up to date on the Bloomberg First Word News. Here's Ritika Gupta.
Thanks, Anna. A warning today from the National Hurricane Center. It now says that Hurricane Laura will rapidly strengthen into a Category 4 storm with winds of at least 130 miles an hour. The storm is expected to make landfall late today or early tomorrow along the Louisiana-Texas coast. It's forecast to produce a life-threatening storm surge and flash flooding. Secretary of State Mike Pompeo highlighted President Trump's leadership in his speech to the Republican National Convention. He said the president had, quote, pulled back the curtain on the predatory aggression of the Chinese Communist Party.
The president has held China accountable for covering up the China virus and allowing it to spread death and economic destruction in America and around the world. And he will not rest until justice is done. He has ended the ridiculously unfair trade arrangement with China that punched a hole in our economy. Those jobs are coming back home.
Pompeo's speech appeared to violate State Department guidance that prohibits political activity whilst on official travel. He spoke from Jerusalem. The Food and Drug Administration Commissioner tells Bloomberg, quote, I made a mistake. Stephen Hahn spoke 2 days after substantially overstating the benefits of an experimental plasma therapy for coronavirus patients. Hahn says he worries that his mistake will hurt the public perception of the FDA. He also said the agency would not rubber stamp a vaccine. At the United Nations, the U.S. has lost its bid to reimpose sanctions on Iran over its nuclear program. The president of the UN Security Council rejected the Trump administration's demand. All but one of the Security Council members had said the U.S. proposal was illegal. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Anna.
Ritika, thanks so much. It is her party. Esther George in Jackson Hole. Yes, the Kansas City Fed has territory over Wyoming, and it's always been about the Kansas City Fed and a really, really valuable conference. Esther George in conversation with our Michael McKee. Look for that in the 7 o'clock hour. This is Bloomberg Futures Flat. Good morning.
don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Donald will not rest until he has done all he can to take care of everyone impacted by this terrible pandemic.
He has ended the ridiculously unfair trade arrangement with China that punched a hole in our economy. Those jobs are coming back home.
Right now, our economic health is coming back. With emergency spending and tax cuts, Americans are going back to work. Now, looking ahead, more tax cuts and regulatory rollback will be in store.
I don't want to use this precious time attacking the other side, because as we saw last week, that kind of talk only serves to divide the country further. I believe that we need my husband's leadership now more than ever in order to bring us back once again to the greatest economy and the strongest country ever known.
And there a vision of day 2 of the Republican convention, and again, it continues tonight. David Weston with our coverage here at 10 p.m. as well. Someone taking all this in is someone with earned credibility on covering President Trump and the many paths of his advisors. She is our senior writer for Bloomberg News, Stephanie Baker, and she is definitive on the campaign of Donald Trump and the governance of Donald Trump as well. Stephanie, I want to give you an open question as I can. After this convention, what would you expect from the Republicans and the Democrats into September and into the heat of October?
Well, it's a very odd campaign because of the coronavirus pandemic, and it's changed the whole nature of campaigning, and of course, it changed the way the convention was held. I mean, the whole night really felt like a reality TV show, and indeed, the Republicans used producers from The Apprentice, Trump's reality show, to help them stage the event. I think there will be reverberations from this convention. There was a lot of criticism of Mike Pompeo speaking at the convention. No Secretary of State has spoken at a convention in decades, and he did so while apparently on official business in Jerusalem, and already House Democrats have begun an investigation into whether that speech was a violation of State Department rules in the Hatch Act,
Stephanie,
I'm placing a new order to sell short Japanese yen. Just 1 second, I need to check at what price. $106,285. 106,285. Okay.
Party, we've already heard from 3 of Trump's children, and we will hear from Ivanka Trump later in the week on Thursday. And I expect them to continue to dominate the Republican Party. And they spoke in a way that was very political rather than personal. And I think that's the real takeaway, that they weren't giving, personal testimonials about what a great guy their father was, but they were making very political statements, which I think is unusual for, members of the president's family, when campaigning or giving speeches at a convention.
Stephanie, good morning. How is the decision by President Trump himself to speak every day, every evening at the event going down? That's not usual in itself, is it?
No, it's not. I mean, he, the other unusual thing he did last night was he issued a pardon over, by video link, and he presided over this naturalization ceremony at the White House where no one was wearing masks. It was a sort of very politicized infomercial and an attempt to court the votes of minorities, even though he has pursued very clearly sort of anti-immigrant policies while he's in office. So I think it's very much about being front and center. This is definitely Trump's party, and in some ways it should come as no surprise that he wants to appear on every night.
Here in the UK, we seem to hear a lot from non-Trump Republicans. Is that a force to be reckoned with at the moment in the US, Stephanie?
Well, you do have a fairly vocal group of Republicans that are actively campaigning against Trump, through this Lincoln Project, for instance. I think they're much more vocal than they were in 2016. I think it still remains to be seen how that really plays out and whether or not that does help tip the balance. Trump enjoys extremely high ratings within the Republican Party, according to most polls. So I think that the number of Republicans that have broken away and opposed him are still relatively small in the greater scheme of things. Whether or not they play a crucial role, with swing voters in the swing states that are so important for him to win for re-election, that remains to be seen.
Stephanie, one final question. The theme last night, certainly within the zeitgeist, was to go after the suburban vote, and particularly the suburban female vote. Did they succeed?
I think, trying to look at this as a neutral observer, yes. I mean, I think that they did achieve some of that through Melania Trump speaking. We don't hear from her very often, and I often wonder why, because she does effectively soften Trump's edges. She was the only one to directly address the coronavirus pandemic and the toll it's taken. Her speech, I think, was a clear attempt to target women voters, the majority of whom have broken for Biden. And she staged this rather dramatic entrance, almost catwalk, runway walk entrance into the Rose Garden from the White House. And again, stood in front of a lectern with the presidential seal, something I don't think has ever been done at a party convention before. And she was dressed in this sort of green khaki military almost dress. So I think she did speak to women voters, as did Tiffany Trump, in a way that I think, they've clearly seen that they need to be courting particularly suburban female voters if they're to win election.
Stephanie, thank you for the perspective. Hugely valuable from London. Stephanie Baker this morning. That noise you hear in the background, this is something we can't impede it. I mean, the Edwards family knocking out the walls, making the East Wing larger as well. How's that construction going, Anna?
I apologize, but it isn't my fault. It is not our construction project. It is a neighbor's. So I apologize if you hear that on air.
Come on, you're putting in one of those greenhouses I read about in World of Interiors. It costs like, $1 zillion thousand.
I'm calling it the Tom Keene extension.
Oh, there it is.
The Tom Keene extension. You're welcome.
Construction news we need from London. Lisa Bramwitz had the same thing a couple of months ago as well. What you know is you can remain calm tonight. David Weston with thoughtful interview.
Order to sell short Japanese yen is cancelled. Okay, it moved too far.
In Jackson Hole, our coverage led by Michael McKee. This is Bloomberg.
On another hand, I'm placing an order. Now it's too late. As you can see, I wanted to place an order to buy euro, but it just moved. Wow, too fast. Okay, let's wait for another opportunity.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index, true diversification.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Now, the NBA is playing in bubble in Orlando. How is that working out? And are you surprised that it's worked out reasonably well, or you think it can be done better, or what's your view of it?
It's shocking how well it's gone. I mean, there's so much risk, just bringing such a large group of people, thousands of people together in one area, and to have 0 cases, that's stunning. I mean, literally, we were concerned about what might happen, because primarily you're talking about a population of 20-somethings. And as you can see outside the bubble, just, people, 20-somethings in any city, they're not the most conscientious when it comes to wearing masks and following social distancing and other protocols. And so, to our players and staff and Disney and the NBA, to their credit, everybody has been really, really careful, and it's paid off.
Mr. Cuban with David Rubenstein, always interesting. Peer-to-peer with David Rubenstein, an important conversation. We'll have much more on that here. Look for that 9 p.m. Tonight, this before our Republican convention coverage. Right now, we digress. I was briefed by John Farrell. He called in from Tuscany on this as such big news, and that is that Mr. Messi of Barcelona wants out. We went to our expert on English football, not Jonathan Farrow, but one Maria Tadeo in Brussels, and she joins us right now on the foundations of Barcelona cracking as well. Maria, I guess the basic idea is he's unhappy, and maybe he'll go to Man City for more money than God, and the number I have is $826 million, folks. That's right, $826 million. Okay, great. But what's it mean for Barcelona, Maria?
Well, Tom, for starters, it's a shocker because Messi is one of the greatest players ever, no question, full stop. When you look at the relationship between Messi and Barcelona, they scouted him when he was 13. He comes from Argentina. They brought him over to Spain. They really launched his career, and they have been working together for 20 years. This is almost, the brand has become one. It's Messi and Barcelona. The two of them just go so well together. And now what you're seeing is just not only he wants out, but it's the way he's leaving. They're not on speaking terms. This is all happening publicly. This is all happening over Twitter, and the team is just imploding. So you're going to probably lose your star player, someone that you thought was going to retire in your team, a legend for your team, and then of course it also signals the end of a style. Everything around the way Barcelona plays, of course, moves around Messi, but if he goes, then what's going to happen next? And that's a question.
Anna Edwards, do you see the difference in Maria Tadeo talking about Messi versus when she's talking about EU conferences? It's stunning, Anna Edwards, the difference.
I've seen Maria put just as much enthusiasm into a conversation around Eurozone debt. Frankly, Tom, how could we suggest otherwise? But Maria, this is fascinating, and it has lit up the Twitter sphere in the way that you would obviously expect. Plenty here in the UK calling for him to come to the UK, hoping he comes. Peter Crouch, I saw on Twitter, saying if he comes to the UK and stadiums are still closed, that would be an absolute travesty. I mean, we talked about where he might go. Is there any clarity on that at all?
Well, Anna, there isn't, and there's a lot of speculation that he could go to Italy, that PSG could buy him in Paris, and he could move there, also go to the UK. But what you need to factor here is not just the team. Any team in Europe would love to have Messi playing for them. The question is, who is going to be able to pay 700 million euros? That is the buyout clause that they would have to pay to get him on the squad. And this is going to turn into a huge legal battle because Messi says, I want to leave, and I want to leave free. I don't want this buyout clause to be an issue for me. And Barcelona is saying, I mean, not so far. I'm not going to lose my star player and also not make money on this.
Maria Tadeo, one of 99,000 people ensconced in Camp Nou to watch Barcelona all too often. Maria Tadeo, thank you for that impassioned report on Mr. Messi. John Farrell giving me notes here from Tuscany on what to say because I have no clue what I'm talking about. Future's flat. Dennis Gartman next. He's fired up about North Carolina State football. Gartman on gold. Stay with us. This is Bloomberg.
It's such an interesting new world. The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging. We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
This morning, all roads lead to Jackson Hole. Well, actually not. It's a virtuous Chairman Powell. He will speak to a virtual conference on the virtues of lower for very, very longer markets. Well, we're stuck in the August doldrums this morning. There's no stimulus. There's no income support in America. How to calibrate economic growth in the next 12 months. And the secretary from Jerusalem, the First Lady, with 4 flags from the Rose Garden. It is an original convention as the president goes in search of the important suburban voter. Good morning, everyone. Bloomberg Surveillance, Tom Keene in New York, Anna Edwards in for Francine Lacroix in London as well. I thought Max Kettner, Anna, was absolutely brilliant in the last hour on this growth dynamic difference between Europe, where maybe it's better than expected, in the U.S., where maybe it's too good to be true, and how they may recalibrate here into September and October.
Yeah, and that'll be really interesting to watch flows, won't it? With plenty of investors telling us they like the catch-up story in Europe. But is that overdone? We've got a big fiscal stimulus promised overnight, Tom, from Germany, an extension to their furlough scheme.
We'll have to see. We're going to get right to it now. We're going to go on Hurricane Laura here in a moment, and then we're going to go to Dennis Gartman, your first read news in New York. Here's Ritika Gupta.
Morning, Tom. Anna. Warning today from the National Hurricane Center. It now says that Hurricane Laura will rapidly strengthen to a Category 4 storm with winds of at least 130 miles an hour. The storm is expected to make landfall late today or early tomorrow morning along the Louisiana-Texas coast. It's already disrupted oil and natural gas operations throughout the region. On the second night of the Republican National Convention, speakers tried to humanize President Trump and highlight his leadership. First Lady Melania Trump spoke from the White House Rose Garden.
I don't want to use this precious time attacking the other side, because as we saw last week, that kind of talk only serves to divide the country further. I believe that we need my husband's leadership now more than ever in order to bring us back once again to the greatest economy and the strongest country ever known.
Meanwhile, Secretary of State Mike Pompeo said the president had made historic progress towards Middle East peace. In Wisconsin, the governor has declared a state of emergency. There was a third night of violent protests in Kenosha over the police shooting of a black man. Businesses were vandalized and buildings were set on fire. Meanwhile, shots were fired in a confrontation between protesters and a group of armed men. One person was killed and 2 were wounded. Then that trade deal with China may pay off for farmers in the U.S. Bloomberg has learned that Beijing is set to buy a record amount of American soybeans this year. The total will probably be about 40 million tons. That's around 25% more than in 2017, which is the baseline year for the trade deal. China is taking advantage of a drop in soybean prices. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Anna.
Ritika, thanks so much. Yields higher today. Right now up 3 basis points on the 10-year, 0.71%. And that real yield's stable, which means we've got nominal yield up, inflation expectations up as well. We've got a churn in the equity markets. Anna Edwards?
Yeah, let's look at what we've got happening here on European equity markets. We're up by 0.3% on the Stoxx 600. The Xetra DAX providing some support. That fiscal stimulus that I mentioned overnight with the extension of the Kurzarbeit, the job the support scheme, the furlough scheme essentially from Germany, that is adding to appetite for risk assets here in Europe. Although we are off our highs, some of these markets just tipping into negative territory as we track euro dollar down 0.1%, 118. Tom.
Very good. Right now, we want to bring in someone I've worked with over a decade. Rob Carolyn has given me wonderful, non-hysterical weather coverage with Bloomberg Radio. And we're thrilled he could join us with this important hurricane today worldwide on Bloomberg Television. Rob Carolyn, I want you to explain how a storm hits Cuba twice, just north of Jamaica, turns right and heads up near Louisiana and Texas and gathers that inertial force, the physics of how it gets so strong so fast. How does it do that?
Well, Tom, the scary part was the fact that it was able to hold itself together as it moved along the south coast of Cuba. Over the weekend, we saw the circulation maintain itself and began to become alarmed because knowing that the Gulf of Mexico, water temperatures are close to 90 degrees, and there's a big high over the Gulf, we knew it was probably going to be a dangerous storm once it reached the Gulf of Mexico. What it's doing, Tom, is it's moving along the southwestern periphery of the Bermuda High. The Bermuda High is the driving force in the Atlantic Ocean during the summer months. It strengthens at what brings heat and humidity to the eastern and central United States during the summer. So this storm is tracking along its periphery, and it's coming around the southwestern side. That's what's allowed it to make that turn into the Gulf. Unfortunately, with water temperatures between 85 and 90 degrees out ahead of the system, a big high over the top of the Gulf, it's in the right place at the wrong time. It is going to intensify very, very rapidly. The Air Force reconnaissance has been showing steady, very rapid pressure falls, and we do expect it to be a Category 4 hurricane when it makes landfall tonight, very, very close to Port Arthur, Texas, there on the Louisiana-Texas border.
Rob, good morning. Tell me a little bit about some of the detail of the damage that we would expect to see created here. We saw the National Hurricane Center this morning saying this could be life-threatening, of course, talking about a storm surge, extreme winds, flash flooding, a whole catalogue of expected effects, negative effects from this hurricane.
Exactly, Anna, and it's the storm surge that's the greatest threat because the water levels there along the southern Texas and southwestern Louisiana coast are likely to rise 15 to 25 feet with this storm. They'll see storm surge flooding as far to the west as Houston and possibly as far to the east as the areas outside of New Orleans. There are storm surge watches in effect for those areas. As you get closer to the Texas-Louisiana border, it becomes storm surge warnings. The other issue is how intense does the storm get by the time it makes landfall? Right now, we're expecting the winds to be at least 130 miles an hour, sustained with gusts to 150 miles an hour. But a Category 4 goes all the way up to 155 miles an hour. So that's a big difference. The storm is actually getting a large circulation. The Air Force is finding that the hurricane force winds are about 70 miles out from the center of circulation. The tropical storm force winds 175 miles out from the center of circulation. So the folks in Lake Charles are going to be, a distance from where this storm makes landfall, but there's the potential for some damage as far east as the Lake Charles area, and potentially some of the cities off to the east of the Houston area could see some tropical storm force winds. So it's going to have a very wide impact there along the Texas-Louisiana border. And then also, when you have a landfalling hurricane, they always have the tendency to produce tornadoes. Yeah. So we'll probably see some localized landfalling tornadoes tonight in that area. And then the rainfall, several inches of rain likely along the path of the storm as it moves inland overnight along the Texas-Louisiana border, and then eventually takes a turn towards the weekend, towards the Tennessee River Valley.
I mean, Rob Caroline, I know it's harder than predicting the next Red Sox win, but what does the rest of the hurricane season look like? I mean, can you take a crystal ball and estimate what September, October, and indeed November look like?
Well, we're in the height of the season, Tom. The seasonal peak usually occurs around September 11th, so we're still, got time to go to get more storms. The interesting thing about this season, we knew it was going to be very active because of a developing La Nina in the Pacific, warm water temperatures in the Atlantic, but the one unknown going into this season has been the Saharan dust that has been blowing off the Sahara and across the Atlantic. What it has been doing is keeping the storms from developing far out in the Atlantic, or when they've been doing so, they've been developing further south than we normally see. So what that may end up meaning is we don't get big storms, the Cape Verde type storms that we saw with, say, a Hugo or a Marilyn in years past, but we may see storms that develop more in the Central or Western Caribbean or Gulf, which means the Western Caribbean, the coast of Mexico, Central America, and the entire Gulf Coast may be more at risk through the remainder of the season than, say, the areas of the East Coast. If that Saharan dust continues to come off the Sahara, which it's doing, and it normally stops by mid-August, it may mean that we're seeing more of an impact further west in the Atlantic basin rather than in the east.
Rob, really good to speak to you. Thanks so much. Rob Carolan, Bloomberg meteorologist, joining us with great detail of this particular hurricane and hurricanes still to come, perhaps, as well. Later today, Kansas City Fed President Esther George speaks to Bloomberg, 7 a.m. in New York, 12 p.m. in London. All of that in the run-up to Jackson Hole, of course. Will we get the same beautiful backdrops that we normally get to those interviews that we bring to you from Jackson Hole? We'll have full coverage. This is Bloomberg.
We are are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
Bloomberg Surveillance. Good morning, everyone. Anna Edwards in London. I'm Tom Keene in New York. We're looking at a churning market. Tech up, Dow negative 46 on futures. SPX flat this morning, but we'll see where we are in a few hours. Right now, it is simple to say he's chairman of the University of Akron's endowment. He's a potential football coach at his North Carolina State. But far more, Dennis Gartman is the mother of all gold calls over the last 20 years. For a while, he was a piñata. Gold wasn't working out. And he said, own gold in yen, in euro. And it has been a Gartman moonshot, one of the great successful trades of the generation. What are you doing with gold right now, Dennis Gartman?
I'm still long of it, but instead of being long of gold in yen and euro terms, I'm actually not long of gold in U.S. dollar terms. I think that's the simpler trade. As I've said for years, there are times when one is to be bullish of gold. There are times when one is to be bearish of gold. I'm not a gold bug. I don't think that you should always own gold. And there are times when one is to be neutral of gold. But I think given the expansionary monetary policies here by the Fed, by the Bank of England, by the ECB, by the Bank of China, by the Reserve Bank of Russia, by the Bank of Canada, all of the monetary authorities of consequence have been expansionary, and I think that is what's driving gold prices higher. So gold is still in a bull market. You've had a nice correction here in the course of the past 2 weeks or so.
Yeah.
Seems to be support. I think you should be long of gold, period.
Do you have a support level for gold where you load the proverbial Gartman Grand Banks? I mean, it's at 1925. Is there a level where Dennis says this is support?
1925 should be support, to be quite honest. I think between 1900 and 1925, there has been, there should be, and there continue to be support. If we start to take out 1920 or 1900 on the low side, I'll reduce my position just a tad, not dramatically, but a tad. So this is support. It should hold right here.
Dennis, good morning to you. Now, I was really interested in a story I read on the Bloomberg this morning called Hoarding Gold, Bitcoin and Whiskey to Soothe Inflation Anxiety. I wonder if you're nervous about inflation. Is that why you hold gold? And does that make you want to hoard the other stuff, the Bitcoin and the whiskey?
Yes, Anna, I actually am beginning to become quite concerned about inflationary pressures. I mean, take a look at the grain market. The grains have made lows and continue to move higher. You're seeing strength in copper, strength in tin, strength in aluminum. Crude oil is a little stronger. It's interesting that crude is not $2 and $3 and $4 and $5 per barrel higher because of what's going on in the Gulf. But crude oil is going from the lower left to the upper right. Livestock prices have been moving higher. So I think commodity prices, and of course, what has happened in the course of the past 2 months in lumber is something to pay attention to. So I'm starting to be very concerned about inflationary pressures. And I thought it was interesting that Mr. Rosengren, the president of the Federal Reserve Bank of Boston, said that he was going to be amenable to and would allow a movement of inflation above 2% for a protracted period of time, as long as the unemployment rate remains above 10%. And certainly that's going to happen. So the monetary authorities have been expansionary, and they're becoming more and more complacent about higher and higher levels of inflation. I think that is a problem to be paying attention to, and I don't think people are.
That's interesting, the positioning of inflation relative to unemployment. A lot of people on the other side would suggest that if 4% unemployment, didn't generate any inflation, then why will 10% unemployment generate any inflation?
What I think is happening here, and nobody's paying much attention to the fact that we've become trade protectionists all around the world, and I think that that's going to drive wage rates higher over the course of the next year or two or three. If we're trying to bring and are bringing employment or production back from China to the United States, automobile workers here in the United States make what, $65, $70, $80. Automobile workers in China make what, 12, 13, 10, 2, 4, 6, 8, 10, $12 per hour. As long as trade protectionism is rising in the industrialized nations, I think that's going to drive wage rates higher, even with unemployment remaining at relatively high levels. And nobody's thinking about that fact.
Dennis, one final question, and I want to go to the back end of your Claim newsletter, which has been retired. You have been a sharp critic of this president.
Yeah.
What would you look for here that Mr. Biden needs to do to take suburban votes in your Virginia, to take suburban votes near North Carolina State? What is the Gartman prescription for Vice President Biden?
Actually, he's done a decent job of taking those votes. I think what really has to happen is that the President of the United States, and I will vote for him, let's be blunt, I'll do it, I'll be reticent about it, but I'll do it, if he would adopt a more adult posture, a less tweeting posture, a quieter posture, I think it would help him a lot with those voters that he seems to be losing. So Mr. Biden, by remaining quiet, has done himself a service. The president, by remaining loud, has done himself a disservice. And I think the president could get those voters back if he would just become a little more adult, a little more presidential, a little more Ronald Reagan-esque, a little more Mike Pence. And that's going to be, I think that's what we will end up seeing over the course of the next several weeks and months.
Dennis Gartman, thank you so much. Gartman there on gold. Again, you heard him say support here at the 1900, 1925 level as well. Futures mix today, it's got an August doldrums feel, but boy, that could change with OC out of Jerome Powell tomorrow at the Jackson Hole Conference. Our Michael McKee on top of that story. Coming up in the 9 a.m. hour, Michael Wilson, Morgan Stanley. This is Bloomberg. Stay with us.
It made me have second thoughts, but ultimately I booked the ticket, so I'll just come back and quarantine for 2 weeks. It's not really a problem.
I just think it's a complete mess. It's a complete mess. And I've been over there all summer, and I just can't see it's going to make any difference at all going there now and quarantining.
We have to go because our children are there. We're going to get them to bring them back to the UK to start school again in September, so we have no choice.
You have to stay in 2 weeks. So you've got friends who've got to get you groceries and all that kind of stuff. Which my wife can do, but just incredibly inconvenient.
We were actually really lucky because we went to the Eurostar
with our tickets, and we were like, please, can you change them? They did it free of charge, but online it was about 177 to change it.
So, because we knew that this was going to happen,
we went there like the day before.
Go there quickly and change them.
Right now, our economic health is coming back. With emergency spending and tax cuts, Americans are going back to work. There's a housing boom, there's an auto boom, a manufacturing boom, a consumer spending boom. Stocks are in record territory. A V-shaped recovery is pointing to better than 20% growth in the second half of this year.
White House economic advisor Larry Kudlow describing the recovery as V-shaped, though many economists see a bumpier road ahead. Still with us is Dennis Gartman, chairman of the University of Akron's endowment and retired editor of the Gartman Letter, of course. Dennis, one thing that does look V-shaped if you squint a little bit is the recovery in the stock in the S&P. We see new highs there, new highs on the Nasdaq. Just how out of kilter, out of your range of possibilities is the positivity we're seeing in equity markets right now?
You know, the problem that we have, or that I have in the stock market, is how narrow it has been. And everybody's talking about that, and they should be. The fact that we've got 5 or 6 stocks that have led the entire market higher. If you take a look at the broad stock market itself, if you look at the S&P 500, about 400 of the stocks are lower for the year. 5 or 6 of them are higher, and higher dramatically. And that is bothersome. Whenever you see that sort of narrowing of rotation, you have to be concerned. It reminds me of what happened back in the early 1970s when the Nifty 50 took the market higher, and yet the market collapsed in September, October, and November of that year. So it bothers me that it has become this small, this tight, this narrow, and I think you should be paying attention to that fact.
Yeah. Is it all about retail investors?
I think it's somewhat about retail investors. It is bothersome to me as a longtime pro in the market that you've got Robinhood, taking the lead on so many things, and you've got people saying that this is a very easy business. You just buy stocks and they go up. Well, that's not exactly true. If you bought Microsoft, if you bought Apple, if you bought NVIDIA, if you bought any of the stocks, yes, they go up.